Good morning, students. So, students, we will be starting on this particular the TDS and TCS part, and we'll try to wrap up this particular important topic on the TDS and TCS. Students, in your examination, Betty, good morning. Students, so far as TDS and TCS is concerned, you people also are aware. Now, there are three types of questions that you can expect in your examination. We will look into that. I'll just give you a broader aspect. One is your MCQs, for sure. Second is that independent questions which are being set. Like the way they have done it in the last attempt also. They have set up an independent question on TDS and TCS. That was there. So last attempt as well, they have targeted some independent questions on that particular TDS and TCS topic. Apart from that, student, apart from that, there is also a case for a kind of a question that they will ask you on some one section, and they will ask you another sub question whether in this case the TDS will it be applicable or not, or TCS will it be applicable or not, something of that sort. So TDS and TCS, students, every attempt it comes for your examination, around 6 to 8 marks you can say easily comes from this topic. 6 to 8 marks is what is the stake which is involved from this topic, very important. So students, now the revision, students, that you should be doing so far as the topic is concerned, I will be making some compartments for all of you. Keep that compartments in mind, because that way it will help you to revise this topic very easily and comfortably. Amrita, good morning. So we will be doing those kind of an analysis, and that is precisely what we are going to target this important topic. Now the first particular point, students, is about the salary. It is in respect of the salary, students. Now, so far as salary is concerned, couple of attempt they have targeted this question on salary, so that is also there so far as the examinations are concerned. Now when it comes to salary, students, there is one typical question you can expect in the examination, and therefore you have to be very careful about this. So the possible question on salary, first of all, students, there is this salary. One important observation, students, to all of you. One is this salary 192, and then there is a new section 194P. There is a new section which is 194P, which has been introduced in this particular Finance Act. So 192 and 194P, the similarity of these two sections are, Bhagwati, good morning. The similarity of these two sections are that we don't have any rate of tax. What should be the rate at which the TDS has to be deducted? These are the two sections where we don't have the rate of tax, students, in this, for 192 and 194P. So here actually the one who makes the payment, the payer of the amount, he has to work out the tax liability. The payer of the amount, students, he will have to work out the tax liability, and that is the reason why they don't have any specific rate of tax. Now very quickly, students, let's look upon to this point. And here in this context, students, in this situation, all of you pay attention, students, to this one. Now what is the scenario over here? In the context of T192, students, there is a two question which is expected herein. One very popular question is this, that whether the payer has to be the employer necessarily. Is this the first question that you can expect over here, is about whether the payer has to be the employer, and the second one would be in 192, calculating what? Calculating the TDS that would be deducted. TDS to be deducted, that is point number 2. So one is about whether the payer can be the employer, that is point number 1. And the second one, students, happens to be in this context whether the TDS has to be calculating the amount of TDS to be deducted in the section 192. These are the two things. Now coming to the first one, students, the payer which is an employer part. If I have to look into this particular perspective, students, the payer to be an employer particular part, students. In this context, what happens, students? In this context, what happens now? In this context of the payer being the employer, the question that is very popular is that supposingly a non-resident has his employee sent to the Indian client. So he has sent to a client based in India, his employees. So accordingly, a foreign company is sending its employees to to a client in India for the purpose of some project work, for the purpose of some sort of a project work. Now the question that arises over here is this, that students, the question that arises over here in this case is this, that whether now first of all, as per the terms, the Indian client will have to make a payment of rupees 5,000 as a daily allowance to the employees of the foreign company who are working in that particular project. As per the terms, the Indian client will have to make the payment of say rupees 5,000 as a daily allowance to the employees of the foreign company. So the question that will be targeted to all of you would be that whether the Indian client who are making the payment, the Indian client who are making the payment of what, students? The Indian client who are making the particular payment to the employees of the foreign company, will they be required to deduct the TDS, students, in that particular case? What is your take on that, students? Will they be required to deduct TDS under section 192? That is important. Under section 192, will they be required to deduct the TDS, students? And the answer to that, students, so far as 192 is concerned, the TDS, will that be required to be deducted? To that the answer is yes, it would be. Students, yes, it would be. So TDS under 192 will be required to be deducted, because in this context, even if the point is this, that they are saying this, that students, that it is irrespective of the fact who is the payer of the amount, what needs to be seen for the purpose of the TDS under 192 is whether the person who is receiving the amount, who are the employees, isn't it? Whether the person who are receiving the amount in their hands, whether this particular amount, is it chargeable to tax under the head salary? Whether the person who is receiving the amount in their hands, whether the amount will be chargeable to tax under the head salary or not. This is the criteria that we need to decide. Bhagwati, employer and employee relationship is not there, because the one who is making the payment, he is not a particular, the one who makes the payment, that particular person is not a employer of that particular the employees of the foreign company. They are the client, they who are the one who are making the payment. So there is no employer and employer relationship in this case between the payer and the payee. The payer is an Indian client, payee is the employees of the foreign company. But what has to be seen, students, is this, that primarily, that in this context you can just quickly write that the payer need not necessarily be an employer, sorry. Quickly write this, students. What is to be seen is whether the amount received by the payee is chargeable. I'm writing about one. Is chargeable under the head salary. Under the salary. This is the only criteria that needs to be seen. I hope that every one of you are clear with this one now. This is the only criteria, students, that needs to be seen. So if the amount which has been paid, students, the payer need not necessarily be an employer. What is to be seen is whether the amount received by the payee is chargeable under the head salary. Chargeable under the head salary, students. Is that clear to all of you? So obviously, when I am, as an Indian client, I am making the payment in the hands of the employees, this particular amount is chargeable under their salary, because these employees are receiving the amount in consequence of their employment with the foreign company. So because they are receiving the amount in consequence of their employment with their foreign company, accordingly the amount so received, will it be chargeable in their hands under their salary? And the answer is yes, students. And accordingly the amount will be chargeable in their hands under their salary. If that is the case, the payer who is the Indian client in this example, they will be required to deduct the TDS, students, under section 192. Now, what is the rate at which it will be targeted? At what rate the TDS will be deducted? The rate at which the TDS will be deducted would be given under section 192. 192 says average rate. The average rate at which the TDS will be required to be deducted, students. So it's the average rate on which the TDS will be required to be deducted. Now, students, what is this average rate? Also, I will just put across to all of you the average rate part. Now, here, students, obviously this average rate you need to calculate. Yes, slab rate you have to calculate, but how you calculate it? Students, actually you have to calculate the payer of the amount. He will have to work out the tax liability of this particular employee. He will have to work out the tax liability. Now, there are some conditions you have to be very careful, because in couple of attempts they have also asked the question herein. The employer need to consider income from any other head and should not consider loss under any head other than the house property. So he will have to take into account, the employer will have to take into account all the income of all the other heads and also the losses, but except the losses. Only one loss he can take that into account, and that is the loss under the head house property. All the other loss, anyway, students, the business loss and all, we all know it cannot be set off from salary income. Also, we do know that the capital gains loss is not eligible for any inter-head adjustment. The capital gains loss is not eligible for any inter-head adjustment. So that is already a settled position. We don't have to really be bothering about the same, isn't it? So this is how the things has to be looked upon. So I hope that all of you are clear with this particular point now, every one of you. So just keep this particular point in mind. Now, there is one more point which is important for competition, and this is this. Students, many a times what happens is this, that the employer is paying the non-monetary perquisite to the employer. The employer is paying a non-monetary perquisite to the employee, like for example, rent-free accommodation. So that is a non-monetary perquisite. Now, in many times the employer agrees to pay the tax on that particular non-monetary perquisite. Many a time, students, the employer agrees to pay the tax on that non-monetary perquisite. So if the employer agrees to pay the tax on that non-monetary perquisite, students, in that particular case, what we will say, that tax is also an obligation of the employee met by the employer. So even that becomes a case of a perquisite, isn't it? The tax portion is actually an obligation of the employee but met by the employer. So even that tax portion borne by the employer will be considered as the income chargeable under that salary. But whether there is an exemption which is available to the employee, and the answer is yes, the employee is eligible for an exemption on that portion of the income, which is nothing but the tax on the non-monetary perquisite borne by the employer. So this particular income, which is the tax portion borne by the employer, this income is exempt. This income is exempt. I'm not talking about the perquisite value of the non-monetary benefit. I'm not talking about the perquisite value of the non-monetary benefit. What I'm only talking about is the tax on that particular non-monetary perquisite, if it is borne by the employer, is also a perquisite, which is also a perquisite in the hands of the employee. But this income, which is a tax portion of the perquisite borne by the employer, this particular income is exempt in the hands of the employee. It is exempt in the hands of the employee. So if it is exempt in the hands of the employee, students, so the employer, while calculating the average rate under 192, he have to always be very careful that if they are giving any non-monetary perquisite, so the value of the non-monetary perquisite will be taken into account while computing the salary income or while computing the total income. But if the employer has also agreed to bear the tax on this non-monetary perquisite, then that tax portion, which is also a perquisite in the hands of the employee, this is eligible for exemption. So you will have to be very careful that this will be considered as an income which is exempt. The tax portion will be exempt and will not be taken into account. Okay. Now, students, the next particular part, be very careful. Now, see, the sequence is really made in a fantastic manner. Students, see 194C to 194M together. All these sections, students, needs to be dealt together. From 194C, 194J, 194H and 194M. This is a compartment. This compartment should be done together, students. Now, many a time, students, I always make a suggestion to all of you students. TDS and TCS topic also should be revised smartly, because this is also one of the topic which causes a lot of concern. May so happen students, going forward, primarily you may not get that much of time to revise TDS and TCS. Please take out a time and revise the compartment. Like for example, take 10 minutes time out and or 5 minutes time, 10 minutes time, and revise one compartment. So you can try to see, DT is a very huge syllabus, huge subject, and therefore there is some sort of an intelligence or a smart way of revising your syllabus is very important. One of the smart ways, try to target these particular portion of the compartment together. If you do that students, it will really be very, very helpful for all of you to really decode this entire thing. Let's have a look. 194C. You will see, sir, what is the logic behind why you're making this as a compartment? You'll come to know. Now 194C is about the payment to the contractor or the subcontractor students. I think all of you are aware of that. 194C is nothing but the payment to the contractor or the subcontractor. Now what they say students over here, payer is all the SSC except the individual HUF, AOP, BOI whose total sales or the turnover. Now in this case students, here also there is a case for an individual. Here also there is a case for an individual student primarily in this context. So all the SSC except the individual. Now if the individual, if they are the payer, if they are the one who are the payer of the amount or the HUF, then in that case their last year turnover should be, the last year turnover or total sales should be what? Should be exceeding students, should be exceeding more than 1 crore or rupees 50 lakhs. So if that is exceeding students, then the individual or the HUF will be liable to deduct the TDS. If it is not exceeding, then they will not be liable to deduct the TDS. Keep that in mind, because there are many sections which uses this thing about the individual and HUF, if they are the payer of the amount, whether they would come under the obligation to deduct the TDS. For that thing, we need to see the turnover or the gross receipt of the last year. If it is more than 1 crore in the case of business or more than 50 lakhs in the case of profession, then yes, they would then come under the obligation to deduct the TDS. 194C talks about credit or payment, whichever is earlier. Now what is the rate? We all are aware there are very 1%. Now this rate, now one more important point students, this rate of TDS students which is there, you will find this section, and one more place students you will find one more section. So here the rate of TDS depends upon to whom you are paying the amount. The rate of TDS depends upon to whom you are paying the amount. This is very unique. Yes, Bhavati. This is very unique students in this context, because in all the cases of the rate determination in TDS section, it is based upon the payment. What is the nature of payment? That decides the rate of TDS. What is the nature of payment? That decides the rate of TDS. Here it is not about what is the nature of payment. We all know it is common. It is for works contract. But what is important is to decide the rate of TDS to whom you are making the payment. So if the payee in this case, happens to be an individual in HUF, if the payee in this case happens to be an individual in HUF, then the rate is 1%. And if the payee happens to be any other person, 2%. I am reminding to all of you one point again students over here, which is this, that in the one more section will come where the rate of TDS will depend upon who is the payee of the amount, who is the payee. And that is not dependent upon the nature of the payment. So there would be one section that will come, and therefore these distinctions are very important to always keep in mind. Anyways, next one students is about the threshold limit. Threshold limit, I think all of you would be aware, 30,000 is for a single contract if you are making the payment. If the amount crosses beyond 30,000 students, then the TDS will come into play under 194C. Whereas if the single contract is less than 30,000, but in aggregate to that particular payee during the previous year, in respect of works contract, you have made a payment going beyond rupees 1 lakh, in that case also the TDS under section 194C will be deducted. Now students, here comes one important aspect, which is supposingly if the payment is of 35,000. Supposingly if the payment is of rupees 35,000, then in that case, will you deduct the TDS on the entire 35,000 or will you deduct the TDS on only the excess portion? on the entire 35 or only on the excess portion, students? What is your take on this one, students? Quickly. So indeed would be excess, that is 5,000, or the 30,000 entire, or 35,000 in entirety. Indeed it is a case. Entire 35,000 the TDS will be deducted. Entire 35,000 TDS will be deducted. Why I'm making this emphasis upon this one, Bethi? The reason is very clear that in the TCS you will find that the TCS collection will happen over and above that. Same will also happen in one section over here, which is 194N. Same will also happen in one more section here, wherein the excess portion only will have the element of TDS to be deducted. So therefore there are few sections wherein only on the excess portion that there is a compliance required for TDS or TCS, not on the entire portion. But these range of sections that we are doing it over here, in these range of sections, the TDS or the TCS compliance, the TDS compliance is on the entire amount. If it crosses the threshold, then the TDS compliance would be on the entire amount. Is that clear to all of you, students? All of you are clear? So I'm making these groundwork ready for all of you, because in some few sections the things will change. So I'm making the things very obvious at the very start itself, so that you can easily compare between this versus that. Okay, fine. Now one exemption in respect of TDS. What is the exemption, students? I think all of you are aware of this one, Amruta, that this 44A, remember that 44A? So that is a 44A. If the payee is the one who falls in that criteria of 44A, meaning thereby he is engaged in the business of plying and hiring, that kind of a business, plus what? He does not own more than 10 trucks at any given point of time during the previous year. So if the Reliance industry is making the payment to the contractor towards the transportation of the goods, and this particular transporter, the transporter does not own at any given point of time during the previous year more than 10 truck, students, then if that contractor will furnish the PAN to, if the contractor will furnish the PAN to Reliance Industry, then Reliance Industry will not, as a payer, they will not deduct the TDS, even if the contract value is more than rupees 30,000. Even if the contract value is more than rupees 30,000. But what if, students, here the game changes? What if he does not give the PAN, then what will happen? If supposingly this person does not give the PAN, then what will happen, students? Are you aware of that? If this particular person does not give you the PAN, then it will be a disaster. Why I say it will be a disaster? Because then in that particular case, forget 194C, your case will then be dealt by 206AA, and the rate of TDS there is 20%. This will be a disaster for you. This is what happens. In fact, this is also same criteria, students. If you remember in 194O for the e-commerce operator whose gross, the e-commerce operator where the e-commerce participant is an individual or HUF, there also the same criteria as there 194O. See, this is the kind of an interlinking that you should always look into it. There also there is this 194O where the e-commerce participant in that case is an individual or HUF, and his gross receipt from this particular the e-commerce transaction during the year is not exceeding rupees 5 lakhs. So there the criteria was monetary criteria of 5 lakhs. Here it is about the 10 trucks. There it was 5 lakhs. Here it is 10 trucks. There also the e-commerce operator who is making the payment to that e-commerce participant, they will not be deducting the TDS if this condition is satisfied. What is the condition? Individual HUF is the payee, the e-commerce participant, and the total gross receipt does not exceed rupees 5 lakhs. Okay. However, the only condition that needs to be complied is that the TDS, students, that the PAN has to be furnished by the e-commerce participant to the e-commerce operator. But let's see, or let's assume that there is a default that has been made in this regard. If we say that there is a default that has been made in this regard, so the next question comes, students. Jyoti, you know this would be a disaster. The disaster would be, forget 5% rate, forget that 5% rate and all. Directly your case will jump into 20%. So this is the MCQ question which ICAI really loves to ask and target in the examination. This is the kind of a question. So herein, if they don't furnish the PAN, so this is the two cases where the requirement of furnishing the PAN is there to get the exemption. This is the requirement of furnishing of the PAN is there to get the exemption. You don't furnish the PAN, your case directly goes to, your case students directly will go to where? Go to 20% 206AA. This, if you allow me students, just if you allow me, this is just what I can say, just a completely on off-track observation students. In the transfer pricing law, but this kind of an interlinking, you people will get stunned. What kind of interlinking I'm doing it right now. In the transfer pricing also students, what is the case? In the case of an international transaction, transfer pricing, what they say is this, that in the case of an international transaction, if you are maintaining the books as per 92D and the international transaction is reported in that particular, in that documents and the books as mentioned in 92D. So what happens? Then in that case, the difference between the arm's length price and the transfer price, the difference between the arm's length price and the transfer price will not be considered as an underreporting. It will not be considered as an underreporting students. Okay. But you don't maintain the books now. You don't maintain the books. You don't report the transaction in this particular books and all. Do you know what they take a position? They take an extreme position, and the extreme position is that then in that case, the difference between the arm's length price and the transfer price, that will be considered as misreporting. Directly in extreme position. Misreporting means 200%. Forget that underreporting, there are two rates, 50% and 200%. So if you satisfy this criteria of reporting the transaction in the documents maintained under 92D, we will not even consider this as an underreporting, which means no penalty. But if you don't do this, then we will take an extreme position of what? Of misreporting. Vivek. Are you clear with this one? This is the extreme position. So I have given you three particular case of extreme position. One is here, wherein I will give you exemption if you are a case of a contractor who is not having more than 10 trucks at any given point of time during the previous year, and you are an individual in HUF. I will give you the exemption of non-deduction of TDS if that contractor will be furnishing the PAN. Same is also with 194O, the e-commerce participant who is an individual in HUF, if he furnishes the PAN to the e-commerce operator, but provided the e-commerce participant does not have a gross receipt going beyond rupees 5 lakhs, if he furnishes the PAN, then they will not deduct the TDS at all. But don't furnish the PAN, we will directly go to 20%. That is 206AA. I hope that every one of you are clear with this kind of a interlinking, which I've done it for all of you. Now, quick point students, then we move to our next section. I'll just discuss with you quick points students. First of all, the definition of works contract. Students, definition of works contract. Now, this is a new particular amendment, which just keep in mind this particular part. So, works contract students, generally what happens is that, as I think many of you would be aware, that in respect of my property, you are doing a work. A simple particular, in respect of my property, you are doing the work. So, in that case, that kind of a work will be a works contract. My property, your work. It will be a works contract. Okay. People, what they started doing was, instead of I providing you the material, I ensured that the material was being supplied to you by my associates. Instead of I providing the material, I ensured that my associates were supplying you the material. So in that case also, earlier this was people have found out the loophole to avoid the TDS compliance of 194C. Now the law has amended, and work as per works contract definition now will include also the material which is supplied by the SSC or his associates. So if the work is performed on the material which is performed by the SSC or his associates, then even that will fall within the ambit of 194C. Apart from that students, what else that we do have for this one? The broadcaster pays for, this is an important one students in this context. In this scenario, 2-3, just be very careful students, these are important points. Now students, couple of quick points students. Herein, Star TV appoints Balaji Telefilms, and they want 52 episode, a family oriented 52 episode family oriented TV serials to be made by Balaji. Accordingly, there is a work contract which is already in existence, and in consequence of that work contract, Balaji Telefilms is preparing that 52 episode serial. If this is the nature of the work which Balaji Telefilms is doing for Star TV, then this consideration paid by Star TV to Balaji Telefilm will be subject to TDS under section 194C. But let's take another example where Balaji Telefilms already has made 52 the serial. Already they have made it, and they are in search of the broadcaster, the TV channels who will host those particular 52 channel television series that they have made. So already if you have made it on your own and then you are checking out with Star TV agrees to host it. Now that payment which Star TV will make to Balaji Telefilms, in that case, will this be considered to be a works contract? Will this be considered as a payment towards the work contract? Answer is no. These TV series was made by Balaji Telefilms without any work contract which was there in existence. And hence Star TV will not be required to deduct the TDS under section 194C. I hope that every one of you are clear, Amruta. So every one of you are clear, students. That exactly is the point. And if that is the case, students, I come to the third particular point, Bhagwati. Students, now please pay attention. Cold storage, again, very popular question that has been targeted, students. If supposingly in the cold storage facility, I am paying a rent, they will ask you a question in a very confusing manner. They will say that I am paying rent for payment for the cold storage facility. Paying a rent. Okay, so whether the rental which I have paid for depositing my goods in the cold storage facility, whether that rental payment will it be subject to a TDS under 194I or under section 194C? TDS under 194I, Jyoti, or under section 194C, that will be the kind of a question that will be targeted in the examination. So they will confuse you by putting a nomenclature. Students, the nomenclature would be rent. Don't go by the name, go by the nature, go by the character. The TDS section, students, many questions, one question at least. Bhagwati, Jyoti, one question at least. You will find a question which is based on the nature of payment or the character of payment. One question, the characterization of the payment, one question always is there. So I am paying you a rent for the purpose of what? For the purpose of depositing my goods in your cold storage facility. So because the name is rent as per the contract, because the name is rent which I am paying it to you, whether the TDS will fall under 194I or whether it will fall under 194C, the name will misguide to all of you, students. The name is going to misguide to all of you. Don't go by the name. It is simply there to misguide you. Go by the nature, go by the character. Tell me here, is it a case of a works contract or it is a simple renting agreement? What exactly it is? Is it a simple renting agreement or it's a works contract? Renting agreement means like I want your particular a place to deposit my goods. What exactly it is? If you are choosing a cold storage facility, it is not like a normal warehouse. Students. Please always be very careful, because the cold storage will preserve your goods. So the goods are to be preserved and not to be stored. One is a storage versus preservation. So if it's simply a storing the goods, yes, then in that case it could be a case of a rent under 194I. But if it is preserving the goods, then it is a case of a works contract. It's a responsibility that I need to preserve your goods primarily, and that will make a case of a works contract under 194C. Storage versus preserving. So if it is a preserving, what cold storage does, it goes under 194C. If it is preserving, what cold storage does, it goes under 194C. If it is storing in a warehouse, then in that case, students, it will go under 194I. I hope that every one of you students are clear. Fine. Yes. So preservation 194C, that is cold storage, and the storage of the goods in a warehouse is 194I. You can just keep this particular point in mind, and that is it, students. Let's move on to the next section now. 194J. Again, an important one, students, here also. In this context, students, in this scenario also, by the way, students, this in 194J, 194H, 194J and 194H, same thing which we discussed in 194I will be applicable. Oh, sorry, 194C will be applicable. What is that? For an individual. So, if the payer of fees for technical service in 194J or the payer of brokerage and commission in 194H, the next section, if the payer happens to be an individual or HUF, then the obligation to deduct the TDS will arise if in the last year, the turnover does not exceed the threshold of 1 crore or 50 lakhs as the case may be. Same criteria is there, because unfortunately this is superimposed over here. The case law is being superimposed. So therefore you may not be in a position to view this, but that is what it is. Okay. So same criteria of individual and HUF also applies over here as well. Now coming to this one. Payment for fees for professional technical service, royalty and non-compete fees. Now again interlinking, students. I'm going to do one interlinking for all of you. There are, how many payments are there, students? Professional, technical, royalty and non-compete fees. So professional, technical, royalty and non-compete fees, there are 4 payments. Now if you see, the rate is 10%, but in one case it could be 2%. Which case it will be 2%, we'll see that. Now 30% per annum separately for each mentioned contract. So if it goes like this, students, 25,000, I have done a 4 contract with a person. So with a particular person, I have done a 4 contract. In one case, I am paying him a professional fees. In another case, I am paying a technical service. In third case, I am paying him a royalty. And in fourth case, I am paying him non-compete fees. So from that same person, I have done 4 contracts. And for each contract, I am paying him 25,000 rupees. So in aggregate, it has gone to 1 lakh. But individually, it is not going beyond 30,000. And because individually it is not going beyond 30,000 students, then in that particular case, whether the TDS under 194J, will that be required to be deducted? To that the answer is no. The TDS under 194J, students, will not be required to be deducted in this particular context, students. Is that clear to all of you? No TDS. But have a look, students, to 194I. Bhagwati, Amrita, Jyoti. Have a look to section 194I. 194I, students, is a case of a renting part, isn't it? Now renting of what? Renting of, it could be plant and machinery, it could be equipment, it could be land, it could be building, it could be furniture. Okay, so supposingly I have taken the entire factory on a rent, and each element I'm negotiating with him. So for plant and machinery, I'm paying him 1 lakh per annum. For the land portion in that factory building, I'm paying him 30,000 rupees, and the building of the furniture I'm paying him another 30,000 rupees, and for the building portion I'm paying him, say in this context, 1 lakh rupees. So I am making the payment for plant. This is for plant, this is for your land, this is for your furniture, and this is for your building. This is the payment that has been made. Now the threshold is 2,40,000 per annum. Per annum. Will I be looking into this threshold on an individual basis, or should I go on an aggregate basis? What should I be doing in this particular case? Will I be going on an individual basis, or should I go it on an aggregate basis? What is your take, students, in this particular case? What is your take, students, in this particular case? Would it be going in an individual basis, or would it go on an aggregate basis? It has to be aggregated over here. That is the real particular distinction that you should always appreciate in this case. Here it goes aggregate, whereas what, students? Whereas if you see section 194J, there the 4 particular different category, for each category the threshold would be decided upon. Whereas over here, whether the TDS under 194I will it be applicable or not, then in that case you will add all the renting agreement in respect of plant, furniture, fittings, land, building, and only if the aggregate of payment exceed the threshold of 2,40,000, only if the aggregate of the payment exceed rupees 2,40,000, that the compliance of TDS will come into play. Vivek, is that clear to all of you? I hope that every one of you are clear with this one, because this is also one of the questions that has been asked. Okay, fine. Now, apart from that, students, what else? Now, many a time, students, just be very careful of this royalty part. Students, be very careful of royalty part, because many a times this royalty, they ask you a question in a different way altogether. Students, tell me one thing. You have to be extremely very careful. Royalty, students, because in NR taxation, students, if you remember, we have discussed this NR taxation. And in NR taxation, we have discussed the definition of royalty, 916. So this royalty, students, always keep this definition of the revision lecture of my royalty definition, which I did with all of you. So always keep in mind about this royalty definition with this section 916. Always link this thing together. Always, students, link these two things together. Clear with this one, students? Because once, what happens in your question number 1 also, total income, I have seen this kind of a question about the TDS particular part. Because if it is a royalty and the payee has to be resident, but be careful, 194J, the payee has to be a resident here. The payee has to be a resident here. Because if the payee is a non-resident, then it is not 194J, it is 195. If the payee is a non-resident, then it is not 194J, it is 195. But if it is a resident to whom you are making the royalty payment primarily, then you have to ensure that the TDS under 194J is deducted. Why I am making so much of emphasis, I'll tell you also. Students are, see, when the students are doing 194J, they know that there is a royalty in this. They are very clear of that point, not a challenge. But the moment they have to do a total income question, at that point of time, their mind is only thinking 194J as professional technical service payment. Then they forget royalty. This is what you people do. I'm telling you, you also know this is not for me. I think you are talking for someone else. I'm talking only for you only. Well, sir, please, can you name that candidate? What is your name? You know your name? Or should I be telling your name also? So, when you do 194J at that particular point of time, at that stage, you know that you know everything. That time, you know professional fees, technical services, you know royalty, you know non-compete fees. But the moment ICAI will give you the question in total income, and there is a royalty payment which has been given as something of that sort, then suddenly your mind does not work like that. In 194J, what is covered? Then you will think, okay, in 194J only what is covered is professional fees and technical service. This is incorrect. This is the point, students, over here. So therefore, students, in this context, be very careful in this particular point. I hope that all of you are clear with this one. And apart from that, I have told you about what exactly it is. 916 is what it is. Fine. So with that now, students, just be very careful about this. One last point which is to be considered over here is, students, couple of quick points, students. Every one of you are clear with this one? Any doubt? Please do ask me on this one. Huh? Now, one last point which has been there, students. If this particular service, personal services, as you all are aware, students, if I am taking this personal services, if I am just taking this as a personal services, students, then no TDS will be deducted. No TDS will be deducted. Same is also with 194C. If the services which I am taking is personal in nature, then again there will not be any TDS that will be required to be deducted. Okay. 2% rate, students, if you see the 2% rate, can you see this 2% rate? 2% rate, two places. Which are the 2% rate on 194J? One is the business and operation of call center, and the second one for 2% students is, this is the second particular one. If it is a technical service, but if the technical service is not in the nature of a professional service, repeat with me students, if the technical service is not in the nature of a professional service, say a normal AC repairing in the office, AC repairing in the office can also be argued that this is a technical service. For argument's sake, I am talking about it. That somebody can argue that the AC repair which I am doing it in the offices are also a technical service, but they are not in the nature of a professional services. Now, somebody will ask you, sir, how do we know it is a professional service or not? Just check 44AA. Just check 44AA students. In 44AA, there is a list of specified profession that has been given to you. So check whether this sort of a service, does it falls under that particular category. So if it is in the nature of a technical service but not in the nature of a professional services, then in that situation the TDS rate will be 2% at par with that of works contract of 194C. At par with that of 194C. So this question you can expect in your MCQ, where they can categorically say that it is a amount paid for technical service. Amount which has been paid for technical services, students. And if it is an amount which has been paid for a technical service but not in the nature of a professional service, so students, be very careful. The rate of TDS that you will do in this case would only be at 2% and not at 10%. Is that clear to all of you students? Just keep that point in mind, students, in this context. I hope that every one of you are clear with this one. So call center and a technical service which is not in the nature of a professional service. Come to the next one, students. 194H, the brokerage and commission. Now, first of all, as I was telling to all of you, and I'm repeating this point again and again, students, always go with the characterization of the payment. Because you people just made a mistake 5 minutes before. You people had made the mistake between rent which is paid for cold storage facility, whether the TDS will it be under 194I or whether it will go under 194C. You people made the mistake. You went with the word rent. What did I told you? Never go with the what is the name of the payment. You have to go with the nature of the payment. You have to go with the characterization of the payment, the character of the payment. So when it comes to brokerage and commission, students, be very careful. You have to see, is there a principal and agent relationship or not? Only when there is a principal and agent relationship that exists in the contract, that the payment which has been made, will attract TDS under section 194H. Now, many students are confused with this term. What do you mean by, sir, principal and agent? Principal and agent means if I am an agent, I am wholly or I am mainly working for you. If I am wholly or if I am mainly working for you, then yes, students, I am working like an agent for you. And if that be the kind of the work which I am performing mainly or wholly for you, then in that case, whatever amount that you pay to me, on that amount you will be required to deduct the TDS under section 194H. Whatever amount that you will have to pay to me, you will be required to deduct the TDS under 194H. Again, I will try to interlink with what we have done in non-resident taxation, although I am repeating this, here the payee has to be a resident. Okay, but one very important observation, students, one very important observation in NR taxation which we have done in 911. If you remember, the non-resident will have a business connection in India if he has his agent in India who is working mainly or wholly on behalf of non-resident in respect of some specified activity. If that agent is working mainly or wholly on behalf of non-resident in respect of some specified activities, then the non-resident will have a business connection in India. However, if we make a twist in this question and we say that no, this agent in India is independently acting in the normal course of his business, then in that case, the non-resident will not have a business connection in India. Okay, so there is no principal and agent relationship that exists if the agent is acting independently and not on behalf or mainly for that particular non-resident. In that particular case, the non-resident will not have a business connection in India. Similar is the observation over here also, that when you talk about the TDS under 194H, that is the payment that you are doing is in the nature of a brokerage or commission. You will have to see whether on that particular contract is there a principal and agent relationship that exists or not. Again, I'm repeating this. Principal and agent relationship would mean that that particular agent should mainly or wholly should be working on behalf of the principal. Please don't get misguided with the word agent. The way 5 minutes back you got misguided with the word rent, you should not get misguided with the word agent. They will say to you that he is paying the amount to this particular agent. Anyone can be agent, but is this agent performing mainly or wholly on behalf of the principal? Or is he acting independently? If he is acting independently, then 194H is not applicable. Now, there are a couple of quick examples, students, which ICAI has covered. I think you may also be aware of it. And that example is this. Students, supposingly, there is an agency, an advertising agency to whom you are approaching. So, you people are approaching, you are a Coca-Cola company and you are approaching to an advertising agency and you want to put up the ad of Coca-Cola new brand in various TV channels. So you will decide, and he will not tell you which particular TV channel you should be going with. He will say that, look, you decide which TV channel you want to go with. I will get you the things done. So he is putting the onus on you to decide. He is not pushing for any TV channels. If he is not pushing for any TV channels, he is not acting for any TV channels. He is not acting for TV channels. And if he is not acting for any TV channels, then in that case, he is acting independently. He is acting independently. So now you have decided that the Coca-Cola ad should go in this 10 TV channels. Fine. He will take 1 crore from you and then he will make the payment to all these TV channels and he will make the payment of say rupees 90 lakhs. The 10 lakhs difference stays with him. The 10 lakhs difference stays with him. Will it be considered as a commission on which TDS under 194H will it be deducted? Answer is no. This cannot be considered to be a commission on which 194H TDS will be deducted for the simple reason which I have explained to all of you, that he was not acting for any TV channels. So he was not acting for any particular TV channels. He was acting it independently in his normal course of business, and hence this 10 lakhs of the amount which he retained, maybe you can say this as a commission, maybe you can refer this as a commission, but this commission will not be subject to a TDS under section 194H. So nomenclature, students, in TDS chapter, nomenclature is not important. What is important is the characterization of the payment. What is important, students, is the characterization of the payment. Is that clear to all of you? Every one of you are clear, students, in this case? Apart from that, students, transaction related to buying and selling of securities, this is out from the game. Okay, so no TDS on this one. So that is also there. I was discussing with you, students, the cases for incentives given. Yes, Jyoti, yes. Incentives given to stockist distributors by SSC on principal to principal basis is not covered under 194H. But be very careful, one case law of Doordarshan, Prasar Bharati. Are you aware of that case law, Prasar Bharati, students? This is the only case law you have to be very careful. In the case of the Prasar Bharati, which is Doordarshan channel, that television channel, they actually appoint the agents to work for them. They actually appoint the agents to work for them. There are terms of the contract which are being there. There are terms of the contract, students, which are being there, which makes it clear that the way the incentives are being planned, that you reach to this particular say, the way the incentives are being planned, the way the contractual obligations are created, the terms of the contract make it very clear that what Prasar Bharati is paying to their agents are in the nature of a commission which will attract the TDS under 194H, because these agents are mainly acting for Prasar Bharati in their case. They are acting mainly for Prasar Bharati. So what is the role of this agent? They will go to all the companies, get the advertisement and give it to Prasar Bharati, and that exactly what happens in this case. I hope that every one of you are clear with this one. All of you. So this is what it is, friends. 15,000 is a threshold amount. Rate of TDS is 5%, and that exactly how it will go in this regard. With this 194M, by the way, students, you tell me one thing. This is a very silly question, but still I just wanted to ensure to ask you this. Will you, when you talk about TDS at 5% or whatever rate that we have seen so far in the various sections, will you load with the HEC? Are you going to load this up with HEC? Or 5% means 5%, or are you going to load with the HEC, students? Quickly tell me the answer. What are you going to do in this particular case? What are you going to do in this case? Will you load the HEC in this case, students? Never, ever. Ever, ever, students. Even think of loading the HEC when it comes to the specific section when the payee is a resident. When the payee is a resident. Yes, Bhagwati. Only when the payee is a non-resident, that the rate specified in all these sections, when the payee is a non-resident, that the rate will have the loading of the HEC. But in all the cases where the payee is a resident, then whatever rates which are being specified in all these sections will have no loading of HEC. So this was just for my satisfaction that you don't make this blunder in the examination. Such blunder, students, are not spared. I'm telling you, and it has a lasting impact in the mind of the examiners. If you make this blunder, it has a lasting impact in the mind of the examiner. So therefore, just be very careful. 194M, the next particular point, students, it's again, now this is why 194M has came into picture, because this case cannot fall under 194J, 194C and 194H. And why it will not fall under 194C, 194J and 194H? There is a peculiar reason, students. Number one, the payer is an individual or an HUF whose turnover in the last year is not exceeding the threshold limit of 1 crore or 50,000, but they are making a very high value transaction. They are doing a very high value transaction. That is the case. Or the second case, why 194M is getting applicable is because the payer is in individual and HUF. The payer, students, is individual and HUF, and they are making personal payment. They are making a personal payment which is not covered under 194C, 194H and 194J, but that payment is going beyond. This is again a very high value payment. So because of these two reasons, students, because of these two reasons that 194M has been created. Number one was when the payer is now not an individual or HUF, when the payer is an individual and HUF, but their last year turnover is not exceeding the threshold of 1 crore and 50 lakhs, and they are doing a high value payment. The second case is the payer is individual and HUF primarily, and they are utilizing the services. Which services? Covered in 194C, 194J and 194H for their personal purpose. And therefore, that payer is not required to deduct the TDS under those sections. So, this is the case. The failure to apply 194C, 194H and 194J in the hands of the individual and HUF, the failure to apply 194C, H and J in the hands of individual and HUF gave rise to 194M. But again, I am repeating, this is only for a high value transaction, and the value should be more than rupees 50 lakhs. So the individual and HUF is paying what? Paying to either to a work contractor, or the nature of payment is a fees for professional and technical service, or he is making the payment of brokerage and commission. Then in that case, if the value is more than rupees 50 lakhs primarily, then this individual and HUF will be required to deduct TDS irrespective of two things. Number one, the last year turnover of this individual and HUF, is what, students? Is less than 1 crore 50 lakhs. And second, it is irrespective of the fact that the services consumed is for personal purpose. So it is irrespective of that, the TDS obligation will come into picture. Is that clear to all of you, students? Every one of you are clear with this one, students? All of you? 5 students. then in that case 194M comes into play. The rate is a median, 5% is the rate, so that they can bear it. So with that, students, I will take the thing further. Now you tell me, students, 51 lakhs is what they have paid. 51 lakhs is what they are making the payment. So the TDS to be deducted, would it be on 1 lakh or on entire 51 lakhs? If 51 lakhs is what they are paying primary, so the TDS, will it be deducted on 1 lakh or entire 51 lakhs? In this context, on 1 lakh or on 51 lakhs, entire 51 lakh, students. This excess of 1 lakh, this excess amount is applicable in 194N, we will see later, and also in the TCS section that we will see. There only on the excess portion that the compliance has to be made. There only the excess portion that the compliance has to be made. Coming now, our compartment is over. So now, students, please tell me, when you revise it, I told you earlier, I am telling it to you again. When you will revise it, you will revise 194C, 194J, 194H and 194M together. Is that clear to all of you? So this is one compartment. Is that clear? Now, the another compartment for all of you is this. 194I and 194IB. 194I and 194IB is your another compartment, which is in respect of rent. Now, the criteria, students, for the rent is the same. Just what you have discussed above, that if the payer of the amount, say for example the tenant who is making the payment, if he happens to be an individual in HUF, then the obligation of deducting the TDS will arise only if the last year turnover is going beyond 1 crore or 50 lakhs. Now, one important correction that you should be very careful about it. Please don't use the word tax audit applicable in the last year. Never use this word. Earlier it was a case. Earlier they have used the word tax audit, but now they have removed the word tax audit. Earlier, students, they have used the word tax audit, but now they have removed the word tax audit. Are you aware of that? Are you aware of this particular point, that earlier they have used the word tax audit? Last year, if the individual or HUF was subject to a tax audit, only then in the current year they will be required to deduct the TDS on the payment made. But the word tax audit is removed. Now, instead of tax audit, they are giving you a particular threshold that if it is for a business, it should go beyond 1 crore. If it is for a profession, then the turnover should go beyond 50 lakhs. Why can anyone tell me why they have done this? Quickly, Shud. 20 seconds I'm giving it to you. Can anyone tell me why they have done this? Why they have replaced the tax audit with this particular specific amount threshold been given? Why have they done this point, students? Quickly. Why have they done this thing, students? Quickly, students. And the reason for it is because now 44AB has another threshold of tax audit of 10 crores. 10 crores is also one of the criteria. So somebody can argue that okay, his turnover although is exceeding 1 crore, but he is still not liable for a tax audit because what? Because for him the turnover on 44AB is 10 crores, not 1 crore. Why? Because of the he is receiving the amount through banking mode. He is making the payment also through banking mode. So for him, in that case, somebody can argue that 44AB is not applicable. And because 44AB is not applicable, therefore he is not required to deduct TDS, even if his turnover may be say 7 crore, 8 crores. Because tax audit is not applicable. Why tax audit is not applicable? Because in 44AB, his situation falls under the 10 crores threshold, not 1 crore threshold, because everything is through bank, whether it is receipt or payment. So for an argument purpose, it becomes a case study wherein he is having a turnover of more than 1 crore, but less than 10 crore, and still 44AB not applicable because of the reason which I have mentioned to all of you. So therefore, they have to replace 44AB with this specific turnover threshold, and the turnover threshold is more than 1 crore or 50 lakhs. So be careful. Again, this can be a question that they can think of it. That look, his turnover was 2 crores. He is not required to deduct the TDS. he is not required, sorry, he is not subject to a tax audit. He is not subject to a tax audit. And therefore in this regard, they will ask you a question further, that whether this particular person, is he under the obligation to deduct the TDS? Whether this particular person, is he under the obligation to deduct the TDS? And the answer is yes. He is under the obligation to deduct the TDS, even though he may not be subject to tax audit. Is that clear to all of you? One more particular angle, be very careful. These are the permutation combination which ICAI does in the exam. And the another angle, students, is this, that they can tell you that this SSC's turnover is 1.5 crores. This SSC's turnover is 1.5 crores. And he has taken the presumptive taxation 44AD. And he has taken the presumptive taxation of 44AD. So if his turnover is 1.5 crores and he has taken a presumptive taxation of 44AD, question therefore to all of you is whether the SSC who has opted for the presumptive taxation of 44AD, will he be required to deduct the TDS under these sections? Under these sections, his turnover is 1.5 crores. He has opted for 44AD. Question therefore to all of you is whether he will be subject to the TDS obligation on the payment that they have made. Will he or will he not? Quickly! Will he or will he not, students? Amrita. Will he or will he not? Jyoti. And the answer to that, students, is he will be under the obligation to deduct the TDS because his turnover has exceeded more than rupees 1 crore. That is the only criteria that we have to see in this regard. We will not be required to go further to investigate whether you are required to deduct the TDS, whether you are subject to a tax audit, whether you have opted for 44AD or not. This becomes irrelevant criteria. These are the criteria which are there only to confuse you in the examination. You just will stick your neck on the turnover of 1 crore or 50 lakhs as the case will be. That is what you are going to deal with it. Is that clear to all of you, students? I hope that all of you are clear with this one now. In this context, all of you are clear with this one now, students, on this context. Fine. Every one of you are clear with this one, students. Students, if you allow me just a 5 minutes break. Will you allow a 5 minutes break, students? 5 minutes, students, you can revise it. Only 5 minutes maximum. Students, you also will take 5 minutes break. 5 minutes break, students. All of you take it and please come. Quickly, students, in 5 minutes time. Which means 11:20. Which means 11:20. Friends, welcome back. Amrita, Jyoti, Vyati, Vivek, Bhagwati. So friends, this is what it is. So therefore, just be very careful about this kind of a question. So students, I'm telling you again, I'm warning you again, 4480. So even though your turnover may go beyond 1 crore and you have opted for 4480, because in 4480 the threshold is 2 crores. The threshold there it is 2 crores. But you will say, if you are making the payment, then you will be under the obligation to deduct the TDS. Supposing, students, he has not deducted the TDS. Let me say to you this, that he has not made the payment, students. Chances are very high that he may not make the payment. So if he has not made the payment, now my next question to all of you is that, what is the consequence? This person is doing 4480. Will you disallow the expenditure? Students, this person is doing 4480. Okay. Now what I'm interested to know what you are going to do in this case then. Are you going to disallow the expenditure? Quickly! Students. What are you going to do this case in this regard? Are you going to disallow the expenditure? Last 10 seconds, students. Amrita, where is the question of disallowance, students, over here? Where is the question of disallowance? Tell me this, where is the question of disallowance here? Why he will disallow the expenditure? Jyoti, why he will disallow the expenditure? He will not disallow it. 4480 presumptive basis. There is no question of disallowance. Then in that case, many students are then asking, then sir, what is the consequence if he doesn't disallow, if he doesn't deduct a TDS, where his turnover is more than 1 crore but less than 2 crores and he has opted for 4480. So all the income will be computed on a presumptive basis, and you are saying that in this particular case he will not be required to deduct, there will not be any disallowance on non-deduction of TDS. So what is the consequence? The consequence, students, would be he will be termed as an assessee in default. And if he is termed as an assessee in default, there would be a penalty that would be imposed. And the penalty amount under section 221 would be equal to the default that he has committed. So whatever is a TDS that he should have deducted, that much of the amount will be the penalty that will be imposed on him under section 221. Apart from that, there will also be interest. That is also would be going to be applicable. Is that clear to all of you, students? This is the kind of the question please expect in the examination. Anyways, rent, students, we have discussed this part of rent part, students, in this context. So what else, students, that is there to be discussed herein? Students, in this context, I have discussed this particular part. Here 194 IB, I will do the 194 IB over here. Rent on land or building. So please pay attention on this one. This is about rent on land and building. Now again, students, the problem is that if I am an individual in an HUF, so if I am an individual or HUF, okay, and I am a salaried employee, so there is no question of the turnover going beyond this 1 crore or 50 lakhs as the case may be, because the turnover of 1 crore 50 lakhs is only in the case when the person is engaged in the business or profession. But what if I am a salaried employee? Although my salary may be more than 1 crore and I am staying in a luxurious apartment on rent. Where I am paying a rent of say 75,000, 80,000 rupees per month. Where I am paying the rent of 75,000 or 80,000 rupees per month. Therefore, the question is whether in that case the TDS under 194 IB will that be required to be deducted? The TDS under section 194 IB will that be required to be deducted in this particular case, students? To that the answer is that yes. Now be careful. Again the same thing what we discussed for 194M, that the failure to deduct the TDS under 194C, 194H and 194J led to 194M when it was a high value transaction of 50 lakhs above. Same way here also, the failure to deduct the TDS under 194I in respect of the payer being an individual or HUF, but the amount which you are paying is a high value rent, that led to the emergence of 194IB. The high value is how much? High value rent 50,000 or above per month, isn't it? So that is the case. Who is the payer? Individual and HUF. Why he cannot deduct the TDS under 194I? Because he is not having a turnover of 1 crore 50 lakhs as the case may be. He is not in that particular bracket. And that is the reason why, students, we have to look into this particular angle. Credit or payment, whichever is earlier, that is fine. The rate is 5% in this case. Perfectly fine. Not an issue at all. Thereafter, students, in this context, one important point. Now, there is another angle of tan. Now, students, just imagine this. All these obligations, students, which are being there, herein. Okay. Can you tell me, students, when they have to deduct TDS? In 194IB, when they will have to deduct the TDS? The TDS will be required to be deducted only in the last month of the previous year or the last month of the tenancy. I think all of you are aware of that. Last month of the previous year or last month of tenancy. I think all of you are aware of that one. Last month of the previous year or the last month of the tenancy. For the last month of the previous year or the last month of tenancy, if the property is vacated during the year. Apart from that, students, the next particular point which is also equally important is that the maximum amount of TDS, there is an upper limit of TDS. This is again a unique to 194IB only. There is no section in TDS wherein an upper limit is designed. That this is the maximum amount of TDS. No section in TDS has got this kind of an upper limit. This is the only section of 194IB where an upper limit has been designed that your TDS, what you pay, will not exceed what, students? Will not exceed what? Exactly, students. The TDS amount will not exceed your last month particular rent. The last month particular rent that you will make the payment. So whatever is the TDS amount that will be there will never exceed the last month rent that he is going to pay when he will come under the obligation to deduct the TDS. Because the intention of the government is very clear that look, we are not that interested in the TDS collection. We are not using the TDS as a resource to collect our revenues. What we are only interested is to keep a track of the transaction that has occurred. Keep a track of a high value transaction that has occurred. This is our only motive. This is our only motive, to keep a track of the high value transaction that has occurred. So yes, if whatever, say March month rent, you are paying 60,000 rupees. Okay, but the total year, because the TDS would be on the entire year payment of the rent. So if the entire year total, if I have to take, then it comes to around, say, 75,000 rupees, the TDS amount. And the last month rent that you are paying in the month of March is only 60,000 rupees. So your TDS liability under 194IB will be restricted to rupees 60,000. Is that clear to all of you? Will be restricted to rupees 60,000 rupees. I hope that every one of you are clear with this one, and that exactly is the point. Yes, Jyoti, your observation is correct. So one question that Jyoti is asking is this, that there are two types of deposit. One is refundable deposit and another is non-refundable deposit. Whether a non-refundable deposit, can it be considered in the nature of a rent? And the answer is yes, because this is not going to be returned to the tenant. So if it is a non-refundable deposit or non-adjustable deposit, if it is a non-refundable deposit, then always keep in mind this, that this will be what? This would always be considered to be a case of a rent. But if the deposit has to be returned, back to the tenant, then that will not have the character of a rent. On that, no TDS will be required to be deducted. If the deposit will be adjusted against, if the deposit can be adjusted against the rent amount, the outstanding rent. If the deposit can be adjusted against the outstanding rent, whether in that particular case this deposit also will take the character of a rent, and again the answer is yes, because it can be adjusted against the outstanding rent. So again, on that deposit the TDS will be deducted. I hope that all of you are clear with this one. Now 194, 193, student. Now the next bracket. So how you are going to revise, students? Quickly tell me how you are going to revise. So your revision, students, as you all are aware, how you people are going to revise up till now, how many sections you are doing like this: 194C, 194J, 194H, 194M. 192 already is a separate league, and thereafter, students, 194I, 194IB. Okay, these are the compartments. So up till now there are 3 compartments which I have taught you. One is 192 separately altogether. Second one happens to be 194C, 194H, 194J, 194M. This is another compartment. The third compartment was 194I, 194IB. And then the fourth compartment is 193, 194A, 194, 194K. This is my fourth compartment. 193, 194A, 194 and 194K, students. Now these are all about the interest. Thus interest on the securities. This is all about that. Now students, this is straight question. There is no question in this where they twist the fact. It is a very outright question. You just need to know. You just need to know, students. So first one, students, is your, they don't ask much of this one, but whenever they have asked in a very straight manner. Students, 193, interest on securities, the payer can be any person, the payee has to be the resident, rate is 10%. In every case, the best part is that, students, the rate is 10%. This is the beauty of the section. So the good part is the rate is 10%. Now, what is only to be focused in these sections is, and in which case the TDS will not be deducted. When you read this, students, you can write herein for the interest or the income on securities, the focus has to be on what the TDS will not be deducted. Only in that regard there will be focus. But then many students are fearing, sir, in that case the list is huge. I understand that, students. The list is very huge. So only what I marked for all of you, you just keep only yourself restricted to those markings. That should be sufficient. So no TDS on interest, students. No TDS on interest will be applicable. So no TDS on interest will be applicable. Can you see that? In all these cases. Now over here, students, my point is that just keep an eye on this debentures. On the debenture of a company, interest is payable to a resident individual HUF if it does not exceed 5,000. Okay, just remember only this. This much is sufficient. So if a company is paying an interest on debentures to whom? To say a particular individual HUF, and the amount is not going beyond 5,000, and obviously account paycheck, company will only pay through an account paycheck. Okay, so therefore in that context, no TDS will be deducted by the company. Only this point is what you need to remember in this case. Is that clear to all of you, friends? Now your burden is lessened. Feeling lighter, students, now? Yes, sir, relatively lighter. Fine. 194A, students, now in this context. Interest other than interest on security. Now this is important. Now this can be any interest. Huh? So I have taken a loan. On that the interest is charged. I have taken a loan. On that the interest is charged, students. That is one. The other example can be, students, is about the interest on capital. Something of that sort. So these are the examples of the interest other than the interest on securities. Same thing, students, 194A, same criteria. Which criteria? That payer can be any person. And in the case of individual and HUF, the payer will be required to be deduct TDS if the last year turnover exceed the threshold of 1 crore 50 lakhs as the case may be, and the payee in this case has to be a resident. Credit of payment, which was earlier 10%, I think that's the rate. Students, here I should tell you that just remember these two things because they have targeted once. Although I must also admit, the question that was targeted was when this was very new amendment. But since it has been targeted, we'll show some respect to this 2 threshold amount which is there for us. One is 40 and another is 50. 40,000, students, would be if the payment is made by banking company engage in the business of banking or the post office, that is fine. But here also same thing. If the payment is made to the banking company, but in the case of resident senior citizen, for a senior citizen we have got a higher threshold of 50,000. For a senior citizen we have got a higher threshold of 50,000 students. So just you can quickly students read this one, all of you, quickly in this context. So students, can you see this one? This was a case of a resident senior citizen. There is an emergency at home, so I'm just trying to ensure that it does not affect my lecture, but still I have to attend those calls. So students, over here, in the case of a resident senior citizen, students, this is the case where the threshold would be higher. So if the payee happens to be, who is the payee, students? The payee happens to be the resident senior citizen. Resident senior citizen, then the threshold amount is higher. Students, therefore, this is the point that you should always keep in mind. And if it is the normal, this is student, this is the normal case. Huh? This is the normal threshold limit of 5,000. In respect of any other case, like I have taken a loan from you, students. Students, I have taken a loan from you, and I am paying you the interest. I am paying you the interest of say rupees 4,000. In that case, I will not be required, students. I will not be required to deduct the TDS in this case. I will not be required to deduct the TDS in this case. Students, what about the fixed deposit? Can you tell me fixed deposit? For fixed deposit, will you check 193 or 194A? For fixed deposit, students, will you check 193 or 194A, students? Quickly. Quickly, students. No. Where you will check? First of all, answer this. Where you are going to check for FD purpose, will you be checking in 194, 193 or 194A over here? Last 5 seconds, students, now. Last 5 seconds. Shoti. It is 194A, Amruta. 194A is what you're going to check into it. I hope that all of you are clear. Now, my next question, therefore, to all of you is this. If I am getting an interest on FD of more than rupees 5,000, I am getting interest, Vyati. I am getting interest on FD of more than rupees 5,000, whether the TDS, will it be required to be deducted or not? Whether the TDS, will that be required to be deducted or not, students? What is your take, students, on this one? Quickly. 5 seconds, students, 5 seconds, quickly. And the answer, students, is that on FD, TDS will be deducted. On FD, students, this will be required to be deducted, students. Is that clear to all of you? You'll say, sir, but how come? What is excluded, students? Be careful. If supposingly in my saving account, I have deposited say rupees 5 crores and on that I have got interest of say 75,000 or 5 crores, so interest of say rupees 5 lakhs. Interest of 5 lakhs, students. Now you tell me, if I have got interest of rupees 5 lakh, students, in this context, so you tell me, students, whether in this case TDS will it be deducted? TDS will it be deducted? Quickly, students. If the interest amount paid on saving account is rupees 5 lakhs, that is the reason why, Jyoti, I am using the word 5 lakhs. That's so when you said 40,000, I was conscious about that. So deliberately I raised the limit to 5 lakhs. 5 lakhs of the amount, students. Interest on the saving. So deposit is 5 crores. Interest paid is 5 lakhs by the bank. So whether in this case TDS will it be deducted? Have a look, students. Interest, there are no TDS if. Can you see that? No TDS if. Point number 6. Point number 6. Can you see this one, students? I'll just enlarge it. I will enlarge the font, students. Don't worry. Interest, so no TDS if. There are many points, of which one point is, what is the one point? Interest on deposit. Interest on deposit other than what, students? Other than the time deposit with the bank. So it means what? So therefore, if it is a time deposit, then TDS is applicable, subject to the limits and all. Then the TDS is applicable. But if it is other than time deposit, students, if it is other than time deposit, then on that, if the interest is paid by the bank, if the interest is paid by the bank on other than time deposit, whether there would be an exemption from TDS, and the answer is yes. And that is why I told you about this particular point. That is why, students, I told you about this point. I hope that all of you are clear, students. So no TDS. So be careful. Saving account and FD. Current account I am not writing because there is no interest at all. Current account I am not writing because there is no interest at all. So saving account, students, and the FD. So saving account, herein no TDS. Here the TDS will be deducted. Here the TDS will be deducted. I hope that all of you are clear with this. Don't make the mistake. Blunders can be made in the examination, students. Shall I proceed further now? With your permission. Now one more important point, students, is this. One thumb rule, because this is actually not to do with this topic. This is to do with the business trust and all. This is to do with what, students? The business trust. Now, students, you will realize that in business trust topic, this is not to do with this one. But still, point number 9 is important because they can angle that with business trust. Students, you know the SPV is there. The SPV is paying the interest. The SPV is there. They are paying the interest. Interest to whom? To the business trust. So the SPV is paying the interest to the business trust. So the business trust will be giving a loan to the SPV. Okay, so therefore interest is paid by the SPV to the business trust. But this interest income will not be assessed in the hands of the business trust, but will be accessible in the hands of the unit holder. Which implies this, that in the hands of the business trust, this interest income is exempt. So if the interest income is exempt in the hands of the business trust, will they be eligible for a full exemption in this case? Will they be eligible for a full exemption? Yes. That is exempt in the hands of the business trust. So if it is exempt in the hands of the business trust, the SPV who is paying the interest, the SPV who is paying the interest to the business trust, will they be deducting the TDS? Will they be deducting the TDS? Answer is no. They will not be deducting the TDS. But if business trust is now making the payment of interest, if the business trust, if they are the one who are making the payment of interest, now to whom? To, because obviously there will be a pass through, because this interest would be accessible in the hands of the unit holder. So at that point of time, whether the business trust will they be required to deduct the TDS because it is accessible in the hands of the unit holder, whether it will be subject to the TDS provision, and the answer is yes, it will be subject to a TDS provision, students. I hope that every one of you are clear with this one. So this is how the angle would be established. And the last one more notable point which I just want to discuss with all of you is about the partnership firm. Where is the partnership firm? This is point number 2. Can you see that, students? Paid or credited by the firm to its partner. Paid or credited by the firm to its partner. So obviously the interest on capital, which you all are aware. So in that case, the interest on capital paid by the firm to its partner, on that no TDS will be deducted in this regard under 194A. No TDS. Apart from that, point number 1 is the simplest point. If the recipient of the interest is bank or the government or the LIC or UTI, then in that case also, if the recipient, who are the recipient, bank, LIC, UTI or the other governmental organization, then in that context also no TDS will be required to be deducted. I hope that every one of you are clear of this particular point. Are you all clear with this, students? Every one of you. So this is the positioning which you have to be very careful about it. Okay, students, just one thing, just I think this example I just clarify once. If the bank is making the payment of FD, you say the interest will be deducted. If the bank is making the payment of FD, you people are saying that the interest will be deducted, but don't forget the limit. When the bank is the one who are making the payment, then the limit is 40,000, 40,000 above if it is a normal person, whereas if it is a resident senior citizen, then more than 50,000. Only then that the TDS will be required to be deducted by the bank. Only then the TDS will be required to be deducted by the bank. Just keep that in mind. This FD part with the bank, then this is what it would be. I hope that every one of you are clear. Dividend, students, I think all of you are aware of this one. So dividend, students, I think the dividend income is taxable. I think the amount also, it is whether it is a deemed dividend or normal dividend. The dividend is not taxable in the hands of the shareholder. Any dividend, normal dividend or a deemed dividend, the dividend is not taxable in the hands of the shareholders. So therefore, when the dividend is going to be paid, students, whether the TDS will that be required to be deducted? TDS will that be required to be deducted, students? And the answer is yes. TDS will be required to be deducted, students, in this case. And then in that case, 10% is the rate. Students, 10% is the rate, students, in this context. Fine. So that is the point which you should just be very careful about it. It's a simple one. Just keep this angle in mind, TDS part. Thereafter, students, the next part which I'm skipping over here is 194B and 194BB, the casual income. Students, the casual winnings. Then this is the next compartment. Only one particular point which is there. If the winning is in kind, then what? If the winning is in kind, students, then what? Either wholly in kind or partly in kind in cash. Then what? So students, in this case, the one who is going to distribute the winning, they will have an obligation. I think all of you are aware of the obligation, that they will have to collect the amount which is equal to the TDS, and only then they will release this particular. They will release. So either you collect the amount equal to TDS or you ask him to show the proof of payment. Let him show the proof of payment. If the payer of this winnings in kind, if they releases this particular winnings without securing the TDS amount, or without the proof that the payee has made the payment in respect of such particular amount winnings, then the payer would be the one who would be responsible. The payer would be the one who would be responsible, students, in this case. So he has to pay it from his own pocket, students. He will have to then pay it from his own pocket. That is the point, and this is what you just need to be careful about. This rest of it is not that relevant to be considered. Now the best part, students, here one more point, students, is an NR part. One more point before I can forget this one. Can you see this one, students? In all the sections, the payee was a resident, but here the payee, students, The payee can you see this one, students? The payee can also be a non-resident. So when a non-resident who is getting this winning or race horse and all those stuff, then for that the TDS will not be under 195. For them students, the TDS will be under which section? 194B and 194BB. Is that clear to all of you? So there is no 195 for winnings so far as the non-resident is concerned. For any winnings, whether the payee is a resident or non-resident, the TDS will be under 194B and 194BB. And therefore, my caution to all of you, this is a silly mistake that you people will do. So whether it is a resident or non-resident, if the TDS will only be under 194B or 194BB, then be very careful about the HEC part. So if the payee happens to be a resident, then the TDS would be 30%. But wherever in this context this would be there, so there, if your non-resident is there, so just be very careful to top it up. Top it up with the HEC students. I hope that all of you are clear with this one. Now students comes the next three, or may I say the next compartment, students. From 194I till 194F. Can you see that? Up till 194A. So up till now, how many compartment, students? Let's recap. 192. Thereafter 192C, 194J, 194H, 194M. After that it was 194I, 194IA. 194IB. After that, students, it was after that? 193, 194A, 194. So 193 interest on security, 194A interest other than interest on security, and 194 was an interest on dividend. After that, 194B, 194BB. Now the following payments which I am discussing with all of you are all the capital payments, meaning these are the capital payouts. So the capital amount is what is paid. Capital amount is what is paid, and on the capital payout or the capital expenditure, on that capital expenditure the TDS is required to be deducted. So which are the cases where on the capital expenditure that the TDS will be required to be deducted? These are the list. So these lists are essentially for the capital expenditure. 194IA, transfer of immovable property other than agricultural land. I think you are aware of this one. 50 lakhs is a threshold, students. Be careful. The moment you touch 50 lakhs, the TDS will be deductible. 50 lakhs or above. 1% is the rate. I think all of you are aware of this one. Now here there are 2 or 3 issues which are there to be considered, and therefore just let's look upon to these issues very carefully. So one is about, students, the factor that people can try to manipulate this 50 lakhs figure, and they can show this that the basic selling price is 35 lakhs only, and thereafter there is a split up done for the remaining charges. Like that, look, for your flat I am taking 35 lakhs, but then 5 lakhs I am going to take as club membership charge, 5 lakhs I am going to take for society registration charge, 5 lakhs I am going to take you for the parking fees, etc, etc. So if I do the aggregate, it goes more than 50 lakhs. But if I only consider for the flat, it is only 35 lakhs. So do I need to aggregate and then see the threshold of 50 lakhs? Answer is yes. I need to go with the aggregate and then see the threshold of 50 lakhs. Point number 2. Point number 2, students. The second particular point, students, over here, again on the threshold. See, all the issue on 194A is essentially only on the threshold amount. All the issue under 194IA is only on the threshold amount. The second particular part, students, is that, say for example, if the husband and wife, both of them are the co-owners of a particular house property, and I am purchasing that particular house property which is co-owned by both husband and wife. Total payment is 60 lakhs which I have to pay, but because they are equal owners, I am preparing 2 checks. Because they are equal owners, 50-50% share is there, I am preparing 2 checks. 30 lakhs in the name of husband, 30 lakhs in the name of the wife. So whether I, who is the payer of the amount, will I be required to deduct the TDS in this regard? Answer is no again. No TDS will be required to be deducted, students, in this case as well. I hope that every one of you are clear with this point. every one of you. Apart from that, now students, be careful. This is the second particular point. Now students, be careful on this one, is that this is about the transaction of immobile property. All you are aware, students, this is about the transaction of an immobile property. And if it is about a transaction of immobile property, chances are very high that the capital gains that you compute, students, here there would be a real issue that will be there. Like the stamp duty, the qualifying amount of stamp duty value which has been taken is say rupees 60 lakhs. Is say rupees 60 lakhs. Okay. The consideration paid, students. Okay, Jyoti. The consideration paid is say 50 lakhs. The consideration paid is say 50 lakhs. Now, if you compare this to, when you remember what happens here, what happens is that here, students, in the capital gains, while we calculate the capital gain, CG, the full value of consideration which I am going to take, students, would be under 50C. And that 50C would be 60 lakhs. The full value of consideration which I am going to take. So, while I calculate my capital gains, so from this then I will reduce the cost of acquisition. This is for whom? This is for the seller. So, seller would be doing the capital gains computation by doing this. Now, for the buyer, this is the consideration paid by the buyer. Now, the buyer will have two impact. One is a TDS. Now, TDS he will see based on 50 lakhs only what he has paid. On that 50 lakhs, he will go with 194 IA at 1%. Apart from that, the buyer also have to check the angle of 56,210. So, these are the topics of capital gains. These are the topics of capital gains, Amruta. So, the buyer will also see the impact of 56,210, whether the gift tax will it be applicable or not. So, they will have to also see whether the gift tax of 56,210 will it be applicable, because obviously it is going to be applicable. I know this one difference is more than 10% of the consideration amount. The difference of the SDV and the consideration paid is more than 10% of the consideration amount, and therefore in this case the gift tax of 56,210 is going to be made applicable. So please see the angle, who will have to do what. This is very important, because individually this section appears simple, but in a wholesome case the transaction becomes a bit complicated and you may miss out on some of the details. So the seller will focus on the SDV while he will calculate the capital gains. He may end up calculating the capital gains by adopting the SDV as the full value of consideration. Whereas for the buyer, students, there would be an impact of the TDS, and also for the buyer there would also be the impact of the gift tax. For the buyer there would also be the impact of gift tax. I hope that every one of you are clear with this one. All of you, students, and that exactly is the point. So this is how the things has to be looked upon in this context. So students, this is a scenario. Now going to the next section, students, 194 IC. Now this is about the joint development agreement. So students, in the joint development agreement, the builder who is making the payment of the builder who will make the payment to the real estate owner. So the builder who will make the payment to the real estate owner, on that payment, only on the cash component, only on the money component, because obviously the builder will also give the new property in the newly constructed building to that real estate owner. So the builder will be required to deduct the TDS under 194 IC only in respect of the cash component, the money component of the consideration which the builder will pay to the real estate owner, and the rate would be at 10%. Students. That is what it would always be considered. Okay. This is again a capital gains part, 194 LA, which is about the compulsory acquisition of an immobile property, wherein the government will have to make the payment of TDS. Now here there is a threshold amount of 2.5 lakhs. If the compensation which the government is paying, students, if the compensation which the government is making the payment of is more than rupees 2.5 lakhs, then in that particular case, students, the government will be required to deduct the TDS in this case. And accordingly the rate of TDS would be 10%. It is one thing which is there. Only one unique point, students, is this. Only one unique point, because this can be there in the examination. Again, students, here there is one exemption on the capital gains on the compulsory acquisition. Students, there is one exemption where if the government is compulsorily acquiring an urban agricultural land, if the government is compulsorily acquiring an urban agricultural land, then in that particular case, the compensation is exempt under section 1037, meaning thereby the recipient will not be required to work out any capital gains in this because it is exempt under 1037. So the government, if they are the payer of that particular compensation amount, which is exempt in the hands of the payee under 1037, government will not be required to deduct the TDS under section 194, under section 194 LA. I hope that all of you are clear with this one. The rate over here, students, is 10%, which is there. The rate is here also 10%, which is to be considered over here. Now the next compartment, students, this is very important. The other capital law. So therefore the first three, students, we have discussed the first three. Which was the first three, students? The first three was 194 IA, 194 IC, and the last one is 194 LA. 194 LA. These are the first three. These are actually the core capital gains issue. The next one, students, the next three is also a capital payment, but they are not in the head capital gains per se. They are also like a capital payment, but they are not more or less the capital gains, that hardcore capital gains provision. The first three is all about the real estate. So the first three is all about the real estate. Which first three? 194 IA, immobile property, normal case. 194 IC and 194 LA are the two special case. 194 IC was about the joint development agreement, where the builder, on its money consideration paid, he is under the obligation to deduct the TDS. 10% is the rate. And the second one is about the compensation on the compulsory acquisition by the law. On that compensation, the TDS would be at the rate of 10% if the compensation amount exceed 2.5 lakhs. I hope that all of you are clear with this one. On the other portion of the capital payout on which the TDS will be required to be deducted is this. 194 DA, students, is about any sum under the life insurance policy. Can you see that? Any sum under the life insurance policy, students. Now this is a very important particular thing because practical questions have been targeted. There is no thrill. There is only practical thing which is involved over here. Absolutely, there is nothing apart from that. So, insurance company and the payee is a resident. On the payment basis, 5% is the rate of the amount of income. Now be careful, students. Can you see this one? A very unique thing. Up till now, the TDS was required to be deducted only on the payment which has been made, whereas over here, the TDS is required to be deducted on what, students? On the income component. On the income component, students. So that is the TDS that is required to be deducted over here. So here the payer, which is the life insurance company, will end up calculating the income component in that particular, the life insurance proceed which they pay to these person. Life insurance proceed which they pay to these person. They will have to see how much is the income component in that particular proceed. Income component in that particular proceed. That they need to work it out. Now many of you will say, sir, how to compute that? This is the only particular thing which you have to be very careful, otherwise you will make a mistake in the calculation. Students, you just have to see when they are making the premium payment. Like say for example 1st of January 2017, if they are making the premium payment, the next premium all will become due on this thing. So that way it has to be done. So supposedly the maturity has happened on 31st of March 2022. The maturity has happened in 31st March 2022. So for how many insurance payment they would have done it? Insurance premium payment. So one is this, one is this, third is this, fourth is this, fifth is this one. You just say, why not sixth? Sixth will happen in 1st April 2022, but the maturity has happened already here. So this is not covered. So you have to calculate this from the premium date to the next premium date. The date will remain the same. So how much payment that you have done? 1, 2, 3, 4 and 5. 5 payments you have done. Say you have made the payment of premium of say rupees 2 lakhs. So 2 lakhs premium you have paid. So 20 lakhs you have got it. And the insurance company is giving it to you say around 50 lakhs. 50 lakhs is what they have given it to you. So how much is the income component that you have received from the insurance company? No, this is 10 lakhs. Sorry, this is 10 lakhs. So the income component, students, that you have received in this particular case is 40 lakhs. And on this 40 lakhs, 5% is the TDS that they will deduct it. Is that clear to all of you, students? Is that clear to all of you? Now you have to be very careful about this one. This, if it is 1 lakh, what is this 1 lakh? Amount of payment or the income component? What is this 1 lakh about? So they have given you the threshold of 1 lakh per annum. What is this 1 lakh per annum? Any idea behind this one, students? This 1 lakh per annum, which they are talking about it, is it the payment or the income component? If the payment is less than 1 lakh, is that what they are trying to say? Or the income component in the payment is less than 1 lakh? What is your take on this one, students? Is it about the payment or the income component? Quickly! Quickly, students. Students, just quickly get your answer. Just give me 10 seconds. Students, just a minute or so. Ready? So students, what it would be? The income component or the payment, students? Are you sure with this one, students? In the compiler, students, can you tell me the TDS chapter? Which page TDS chapter comes? Quickly, students, quickly! In the compiler, can you tell me, students, quickly the TDS chapter, where it comes? Page number. 399 students. 399. Now, if that is the case, students, you have to be very careful about it. There's a question I just wanted to share with all of you. So this is an important particular point that you are in, and you have already offered your explanation over here. So that is the reason why I'm keen to take you through to this particular compiler question. One question, students, of compiler, which I am keen to take you through, is this question. Page number is, students, 34405. Determine question number 359. Determine the applicability of provision of TDS under 194DA in the following case. Mr. X, a resident, is due to receive 4.5 lakhs on 31st March 2022 towards maturity of LIC policy taken on 1st April 2019, for which the sum assured is 4 lakhs. Although we haven't touched upon this one, students, but I'll just talk about what is the sum assured concept. Students, we all know that there is an exemption which is there available under 1010D. Exemption which is available under 1010D. Now, what is the exemption under 1010D all about? The 1010D exemption, students, is about the fact that if your premium, if you have taken the policy before 1st of April 2012, if it is before, then the premium paid should not exceed 20% of the sum assured. The premium paid should not exceed 20% of sum assured. Whereas if you have taken the policy on or before 2012, on or after 2012, then the premium paid should not exceed 10% of the sum assured. That is what the provision is. Now, with that particular provision, students, in mind, in this context, what happens is this, that if you have to check whether your premium which you are paying, is it within the ambit of, is it falling within the scope of assurance, that 20% or 10% of the sum assured, depending upon when you have taken the policy. If it is falling within the ambit of that, no TDS on the payment made. But only when it is exceeding that threshold of 10% or 20%, as the case may be, only then at that point of time you will look upon to the concept whether the TDS will be deducted or not. Now, coming on this one, students, question number 359. Determine the applicability of the provision for TDS at source under 194DA in the following cases. And what is that? Mr. X, a resident, is due to receive rupees 4.5 lakhs on 31st of March 2022 towards the maturity proceed of LIC policy taken on 1st of April 2019. So policy is taken on 1st April when the sum assured is how much? 4 lakhs. And the annual premium is 1,10,000. I can easily say, students, that in this case, the premium that he is paying is huge. It is more than 20%. It is more than 10%. We can easily say that the premium is 1,10,000. Sum assured is 4.4. So in that particular case, it is more than 10%. So if it is more than 10%, TDS will be deducted. How much he is making the payment? 4.5 lakhs. Now, when he is paying the premium on 1st April 2019, 1st April 2020, isn't it? And thereafter 1st April 2021. 1st April 2021. Now, for 3 years, he has made the payment of 3.3 lakhs. Because the amount he is getting is on 31st of March 2022. So, 4.5 lakhs minus this. He has got 4.5 lakhs minus this. So, how much is the income component? 1.2 lakhs. On 1.2 lakhs, how much is the rate? 10%. So, that is the TDS that will be deducted. So, 1.2 lakhs, 5%, sorry. 5% is the TDS rate. Come to the next one. Mr. Y, a resident, is due to receive 3.25 lakhs on 31st of March 2022 on LIC policy taken on 31st March 2012, for which the sum assured is 3 lakhs and the annual premium is 35,000. Now, obviously, students, you can just see 35,000 over here. Policy is taken before 1st April 2012. So, 20% is this. I can easily say that the sum assured 3 lakhs, and this is just about 10%, just about 10%. But the fact that the policy is taken before 1st April 2012, therefore 20% is the maximum threshold, and therefore it is exempt, completely exempt. Come to third one. So no TDS in this case. The third one in this case, Mr. Z, a resident, is due to receive 95,000 on 1st of August 2020 towards the maturity proceed of LIC policy which is taken on this date. So 10% would be the considered, for which the sum assured is 90,000. Students, for which the sum assured is 90,000. and the annual premium is how much, students? Annual premium is 15,000 rupees. The annual premium, students, in this particular case is rupees 15,000. Did you all got this one? So if the annual premium is rupees 15,000, students, in this particular context, accordingly, students, if the annual premium was rupees 15,000, now you all can do this particular thing, students. All of you, with this particular point, is it more than 10%? Yes, it is more than 10%. But what has to be seen? Income component or the maturity proceed? What has to be seen? Can you see that? This is where you people have gone wrong. It is not the income component. It is the maturity proceed. Is that clear to all of you? Now, I'll tell you where you people would have made a mistake. I'll tell you, students, now where you would have made a mistake. With your, you'll say, but the answer would have been the same, no, sir? Answer would have been the same. In both the cases, TDS is not deducted. But the reason that you have to give it is not that the income component is less than 1 lakh. It is the maturity proceed should be less than 1 lakh. Now, let me make you wrong in your observation. Here, if I say instead of 4.5 lakhs, let me make this as 4 lakh. Let me make as 4 lakhs. So then I will do 4 lakh minus 3.3 lakhs. Instead of 4.5 and 3.3 lakhs, I will do 4 and 3 lakhs, 3.3 lakhs, which brings the case to 40,000. 70,000, sorry. 70,000. Now the income component is less than 1 lakh. But the payment, is it more than 1 lakh? Maturity proceed, is it more than 1 lakh? Answer is yes. And the fact that the maturity proceed is more than rupees 1 lakh, whether the TDS will that be required to be deducted? And the answer is yes. The TDS, students, will be required to be deducted in this case. I hope that every one of you are clear with this one. So we are done with this particular proposition, students, as well. Now then, if you all are through with this one, students, all of you through with this one, students? Perfect. Now come to the other one now. In this regard, the next one, students, is this insurance commission and the commission on the lottery tickets. All this is homework for all of you. Insurance commission, and this is the next compartment. The next compartment is the insurance commission and the commission on the lottery sale. The next compartment is the surrogate taxes. Surrogate taxes, students. The next compartment that is there is your surrogate taxes. You will say, sir, what is surrogate taxes in this case? So let me tell you about the surrogate taxes, students. So this, be careful, students. This, any case, I'll be doing it while we will discuss, students, while we will also discuss the topic on surrogate taxes, but it has come over here. Students, just now we were discussing LBA, the big one. The biggest one in the surrogate taxes is the trust taxation, the business trust. So the first is LBA, LBB. Now the next one is AIF. Just think from that size. First business trust, very big. Then AIF, relatively small. Then LBC, that is a securitization trust. So LBA, LBB and LBC. Think from ABC. I am ABC. Who is the biggest one? Ahmedabad, Bangalore, and then Calcutta. Here in the business trust is the biggest one. We see business trust to be a huge, massive infrastructure. Then the AIF comes, and thereafter the securitization trust. Now in the business trust, students, as you all are aware, apart from the other income, which is taxable in the hands of the business trust, remaining income is taxable in the hands of the unit holder. Be it rental income of the business trust, be it the interest income received by the business trust from the SPV, be it the dividend income received by the business trust from the SPV. These incomes are taxable in the hands of, these income of the business trust is taxable in the hands of the unit holder. It is only the other income other than this three. It is only the other income other than this three. That is, which three? The rental income received by the business trust, the interest income and the dividend income earned by the business trust from the SPV. So these income are accessible in the hands of the unit holder, not in the hands of the business trust. But other than these three, the business trust is accessible for the same. So here, students, when the business trust is making the payment, so whatever is the portion of this three income in that particular payment, whatever is the portion of that three income in that particular payment, on that particular portion of this three income in that payment, the TDS will be required to be deducted. The TDS, students, will be required to be deducted. and only on that portion, students, just be very careful. Only on that particular portion, the TDS will be required to be deducted, and TDS will be 10%, and if he is a non-resident, then 10% or 5% as the case may be. Okay, so that is what the things are there in this context. So this is the context which has been there. Now 194 LBB AIF. Now so far as AIF is concerned, business income is accessible in the hands of AIF. Other than business income, everything is accessible in the hands of the unit holder. Everything else is accessible in the hands of the unit holder. So other than business income, whatever is the portion of the payment other than business income, whatever payment that the AIF has done, other than the portion of business income, on the remaining payment amount, the AIF will be required to deduct the TDS at the rate of 10%. On the securitization trust, now this is what I was talking about, students. Can you see that? On the securitization trust, LBC. On the securitization trust, students, what happens? The entire income is taxable in the hands of, entire income of the securitization trust is taxable in the hands of the unit holders. Entire income. Now, this is what I was telling you, that compare with 194C. In 194C, students, as you all are aware, the TDS is required to be deducted in 194C, students, depending upon who is the payee. The payee can be an individual or the HUF. So is also the case over here as well. The payee can be, if the payee is an individual HUF, then the rate is different. If the payee is a other person, then the rate is different. Are you getting this one? There the payee, if in 194C was individual and HUF, then the rate is 1%. Other than individual HUF, 2%. Here payee is an individual HUF, 25%. Other than that, 30%. Non-resident, rate in force. I hope that this point is well taken by all of you. Now comes, students, the next particular point, and I am coming on. Now 194 LC, students, the infrastructure fund. These two are actually, they have been targeted in the examination. Whenever, students, infrastructure fund comes, here the payee will be a non-resident, students. Be careful. 5% is the rate. Remember in 115A, students, this is the another compartment, students. Make this as another compartment. LB and LC, which is the infra fund. Or the payee is a business trust. Remember, which is on 115A, in 115A at 5% rate, the 5% threshold. So the TDS will be under 194 LB or LC as the case may be. So wherever in 115A that we have learned in non-resident taxation where the rate was at 5%, all those 5% cases, the payer in India making the payment to the non-resident or to a foreign company, the TDS would be at 5%. But be careful whether the HEC will be loaded, and the answer is yes, because the payee over here happens to be the non-resident or the foreign company. So this is my next compartment. So up till now, students, which are the compartments that you have done so far? 190. Now let's do a reverse case. 194 LB, 194 LC. Before that, students, it was 194 LBA, LBB, LBC, which is A, biggest one, business trust. Medium, AIF, lower, securitization trust. Above that, students, it was the capital payments, which we've discussed. In which case, the notable feature was 194 IA. IB, 194 IA, herein, thereafter the LA, and in this context, isn't it? That was there. 194 IA, LA and IC, IC, okay, and then 194 DA that we have done for the insurance one. Beyond that, students, above that, we have discussed, students, in respect of what? In this context, the winnings was the two, 194B, 194BB. The payee can be anyone, resident, non-resident, doesn't matter, students. Doesn't matter. Did you all got this one? Apart from that, students, beyond this, if you go above, beyond this, students, that if you go about interest on securities, and in that we have learned 194A, 193, 194, which is on interest on the dividend part. About this 194 IB and 194I, 194 IB and 194I. Thereafter 194, the section of 194C, 194H, 194J, 194M. and last is 192. Is that clear to all of you students now? All of you. So this is how you have to do it, and that exactly is the point, students. Now coming on this one, students, 194 we have done this one, and now 194E, this is for the non-resident sports person. I don't need to tell you, even this is loaded with HEC because it's a non-resident sports person who should not be a citizen of India. Be careful, not citizen, because then only 115 BBA. Remember 115 BBA 20% rate on the 3 incomes? So that is what it is. So I think that we have already discussed, so we are not discussing again over here. Now comes to your 194N. This is what I was talking to all of you right now. So in 194N, primarily be careful. Be careful, student. The withdrawal part from the bank will be deducting the TDS. On the withdrawal part, students, the bank will be required to deduct the TDS. If you are withdrawing the amount, then the bank will be the one who will be required to deduct the TDS. This is what this 194N is all about. I hope that all of you are clear with this one. So payment from one or more account to an account holder in cash by the deductor. The TDS will be required to be deducted in this case. Obligation on whom? Banking company. Recipient can be any person. Now, how much is the TDS, students? 2% of the amount which is withdrawn. 2% of the amount which is withdrawn is the TDS that will be there in this case. Okay. Now, if you see further over here, students, what is that you are going to get it? It should go beyond 1 crore, students, from a single bank. Okay. In this context. Now, here, primarily, if the withdrawal is 1.1 crore, then the TDS will be, students, if the withdrawal is 1.1 crore, then the TDS in this particular case will be what? Will be on how much, students? On the entire 1.1 crore. Or rupees 10 lakh, this thing. Now, students, this is a bit controversial point which has been there in this context. ICAI in their solution, in fact, they have taken, technically speaking, it should go on entire thing. Technically speaking, it should go on the entire thing. But ICAI is taking the view of only 10 lakhs in their answer. You'll say, sir, but how you are saying that it should go on entire 1.1 crore? There is a reason for it, students. There is actually this 194N has 2 amendments that took place. First was in Finance Act 2019 when 194N was introduced. When 194N was introduced in Finance Act 2019, the language that was being used at that point of time was only for the excess portion. But then this 194N got substituted by Finance Act 2020, and by virtue of the substitution, what happened was that the entire amount which you are paying, which is definitely has to be more than 1 crore, but on the entire amount which has been withdrawn, the bank would be deducting a TDS. However, I have seen the ICAI solutions which are still sticking with the excess portion. So students, what we will do in the examination, looking into this, we will go with our main solution. You can write this point, students, here in. The main solution, students, over here has to be on the excess, but write an alternate view. Definitely write an alternate view, that there is a view that as per the amendment, you can just write, students, here alternate view. Sorry, you can write here 194N. Just please take a note. I'll just dictate it. 194N. Examination note. Write in this main answer. Deduct the TDS. Only on the excess of 1 crore. Alternate view in the notes. Right next to that. Right in that, students, the substitution of section 194N. By the Finance Act 2020 the substitution of section 194N by the Finance Act 2020 provides an alternate view that the TDS can be deducted on the entire amount of withdrawal full stop. Fine, so this is what it would be. Now students, if you see, there is this is 2% rate. Now there is also the Finance Act 2020 also introduced the TDS threshold to be applied on a lower threshold amount in the case of a defaulter. Who is a defaulter? Who has not filed the ROI for all the 3 preceding previous year. Now students, be careful, there is an amendment of Finance Act 2021 which I'll just take you through immediately after this. So if you are a defaulter, students, and if you are a defaulter who has not filed the ROI for all the 3 preceding years, current previous year, who has not filed the return? The one who is a withdrawal, the one who has withdrawn the money from the bank. Then the TDS will be deducted on a lower threshold amount. And what is that? Now students, here you will calculate like a slab, the way we calculate the income tax. So up to 20 lakhs of withdrawal, no TDS will be deducted. Between 20 lakhs to 1 crore, 2% would be the rate that will be applied. And in excess of 1 crore, that the rate of TDS will be 5%. That the rate of TDS that will be applied on the entire withdrawal over and above 1 crore at rate of 5%. So that is what it is, students. That has to be considered in this case. Now students, just for your particular observation, I will take you through to this amendment which is there. This. This is a higher rate for TCS. Okay, at the same time for TDS also same section is there. TDS, where it is? Just let me have a look once. Yeah, this one. This is amendment of FA21. 206 AB. Okay, now any sum or income or amount paid or payable or credited by person here referred to a specified person. Who is a specified person? He has not filed the return of income for both of the 2 AYs relevant to the 2 previous year immediately before the previous year in which the tax is required to be deducted. So he has not filed the ROI for the last 2 years. Okay, so 2 years, students, that is important. He has not filed the return of income for both of the 2 AYs primarily. Okay. The 2 previous year to be counted are required to be those whose return filing date under 139(1) has expired, which implies that supposingly I am in the month of June 2022. Obviously, you cannot ask me right now about this thing. You cannot ask me for the last year. I am in June 22. You cannot ask me for what about the previous year 21-22. You don't have to see previous year 21-22. You have to see which previous year, students? Which previous year? 19-20 and previous year 20-21. You cannot see previous year 21-22 because the due date is yet to be expired. So just check for this 2 previous year. If any payment is being made to me in June 22, then the payer will not see for previous year 21-22. The payer will have to see about that 2 years has to be 19-20 previous year and 20-21. Whether for these 2 previous year have I filed the return of income or not. Okay. And the aggregate tax deducted, source and collected, how much should be? At least 50,000 or more in each of the 2 previous year. So the TDS liability in this case is that much. So in this context, students, the rate, there will be a higher rate for them, and the higher rate would be the twice the rate as per the TDS this thing, or 5%, students, or the 5%. So this would be the higher rate that would be applicable in this regard. So students, this is how it would be considered. Now here the defaulter who we are talking about is 2 years defaulter. Whereas here students, we are talking about a defaulter who is 3 years defaulter. Are you getting this one? That is why I just wanted to show you this. Here there is a 3 years defaulter 194N and a new section of 206AB which applies for all the TDS section. For them there is a case of 20%. There is a case of 2 years default period. Anyway students, so this is what it is. 194P students is the simplest one. You can just do it at your side. 194Q. 194Q students is because of there is a TCS section students which is there, and this two sections should be done together. The TCS of this 206C1H, and thereafter I think I've also discussed this part with 194O earlier in my non-resident taxation if I'm not mistaken. But let us revise it one more time. Maybe this is the last time that we are witnessing this scene. So let's not take any chance. So students, over here if you see 206CH, it talks about the consideration that you are receiving. Students, it talks about for what? It talks about the consideration that you people are receiving. So if the consideration which I am receiving in the current year, which I have received, sorry, not receiving, received, of more than rupees 50 lakhs, okay, and I am a person whose turnover in the last year is more than 10 crores. I am a person, the seller. So I am a seller. I am receiving a consideration in the current year of more than 50 lakhs, and I am a person students whose last year turnover is more than rupees 10 crores. In that particular case students, what they have said that in all such cases the TDS will be required to be deducted by the TCS will be required to be collected by the seller, and the TCS students now you are going to collect would be not on the entire amount. That is what I was telling to all of you. The TCS will not be on the entire amount, the TCS will be on the excess portion. So the excess portion game begins now. So excess portion is 194N 206C1H. So students, you will have to take a note of it somewhere. 206CH excess portion. So 194N 206CH. So that is the case. Other also will come, but try to just take a list where the excess portion, only on that excess portion then the TCS will be required to be deducted. Then on the excess portion that the compliance will be required to be deducted. Please make a list of it. You will make a list of it. So the TCS will be collected on a consideration which is more than rupees this thing. In this case, the tax needs to be collected. TCS will be collected on the sale consideration exceeding 50 lakhs. So I hope that this point is well taken by all of you. Now, this particular part students, be careful. Other than the goods being exported out of India or the goods covered in section 206C, 1F and 1G. This is also important because if you remember, for a motor vehicle, there is a 10 lakhs threshold which is given to you. There is a 10 lakhs threshold, and in that case students, what happens is this case students is if supposingly students I have sold a particular car for more than rupees 10 lakhs to the buyer. So to the buyer more than 10 lakhs. So accordingly the TCS would be under section 206C1F. But what if I have sold to a dealer then? The manufacturer. If the manufacturer is selling to a dealer, manufacturer is selling to a dealer, the dealer is selling to the buyer. So just pay attention here. Dealer is selling it to the buyer, and the motor car value is more than 10 lakhs. Then the TCS would be under 206C1F. But a manufacturer giving it to dealer, you tell me whether 206C1F is it applicable? No. And the consideration amount is more than say 50 lakhs, because they will sell to dealer say 50 cars to the dealer. So 50 car, they will give it to the dealer. So obviously the consideration that they are going to receive would be more than 50 lakhs. And if that is the case, 2061F is not applicable and the consideration paid by the dealer to the manufacturer is more than rupees 50 lakhs. So in that situation, students, whether the dealer will be required to collect the TCS under section 206C1H, and the answer is yes. 206C1H, the dealer will be required to collect the TCS. Okay, so they will be required to collect the TCS in this context. So that is one of the points that you should always keep in mind. I hope that all of you are clear with this one. I hope that all of you are clear with this one, students. Clear with this one, students? All of you. So this is the angle that you should be considering. So dealer to buyer, more than 10 lakhs is the value. 206C1F is applicable. 206C1F is applicable. So supposingly the buyer has taken a Mercedes-Benz, a car worth of 60 lakhs, and he is paying the consideration of 60 lakhs. The dealer will still collect the TCS under 206C1F because it is covered under that section. So 206C1H is not applicable. Dealer to manufacturer to dealer, 206C1F is not applicable. It's gone. And therefore, students, in this context, if the dealer is paying it to the manufacturer, then the manufacturer will collect the TCS. If the amount is in excess of 50 lakhs, then on the excess portion, whatever is the excess portion, the TCS will be collected, which is more than on the excess portion at the rate of 1%, 0.1%. Is that clear to all of you, students? All of you are clear with this one? So this is how the things has to be looked upon, students. Fine. Now, students, just before I proceed further in my discussion, can you tell me, apart from this, there was one more case where the discussion came of this 50 lakhs. Where was the 50 lakhs threshold? Let me see how many of you remember. Where was the 50 lakhs threshold which was there apart from this? Where was the 50 lakhs threshold that was there apart from this? Can anyone tell me about this one that we have discussed right now, up till now? Apart from this, where else we had the threshold of 50 lakhs where we had already done a discussion? Can you suggest, students? Apart from 194Q, because 194Q we haven't discussed as yet. 194Q we haven't discussed as yet. So I'm just talking about from whatever discussion that we had, I'm talking only from this. Where else we had this 50 lakhs threshold apart from this? Sale of immovable property, 50 lakhs was there. 194 IA, students. And Vinay, perfect. 194M. 3 cases of 50 lakhs. Did you remember this one, students? Whatever you have discussed. Now let me see, take you to 194Q. Is 194Q also offering the same 50 lakhs threshold? Whether 194Q is also offering? Yes, it is. Can you see that, students? So now please write 4 cases of the threshold which is there. 4 cases now. Which are the 4 cases of 50 lakhs? 194 IA, 194M, 194Q and 206C1H, where the threshold of 50 lakhs is there. Where the threshold of 50 lakhs is there. I hope that all of you are clear with this one. So students, by the way, what about the checklist that you have already made? Students, you have to make this sort of smart revision, because this is again a very dangerous thing. The thresholds and all, to remember them, and in which section to do the excess. So this is the kind of the focus that you should have. So we have done this one. Now, I'm also making one checklist for all of you. You also are copying the checklist, isn't it? Which is a checklist that you are copying, students? In which case the excess has to be considered. So up till now, which section you have covered for excess? So up till now, the excess that you have covered is to 194N and 206C 1H. What about 194Q, students? Even this is there, students. 194Q is the third section where the excess is what is covered. 194N is also the third section wherein 194Q. Now, students, 194Q is the TDS which the buyer will deduct if he is paying the consideration of 50 lakhs. Which type of buyer? The buyer who is having a turnover in the last year of more than 10 crores and he is making the payment in the current year. He is making a payment in the current year to the seller of an amount which is more than 50 lakhs. Then on the excess over and above 50 lakhs, he will deduct the TDS at the rate of 0.1%. 0.1%. Now students, this is where the real challenge happens. 194M and then 194Q. This is where the real challenge will happen. 194M and 194Q. Now 194M would be applicable if the buyer is having a turnover of more than 10 crores last year and current year he is making the payment to seller of more than 50 lakhs. Which seller? The seller who does not have a turnover in the last year of more than 10 crores. Because if the seller who does not have a turnover in the last year of more than rupees 10 crores, then the seller will not be subject to the TCS collection. The seller will not be subject to any TCS collection, students. Do you all agree to this one? The seller in this case will not be subject to any TCS collection because the turnover is less than 10 crores in the last year. So only the buyer who is making the payment of 50 lakhs, more than 50 lakhs, will be required to deduct the TDS. Similarly, only the TCS under section 2061H would be applicable. That is, no TDS will be applicable if the seller is having the last year turnover of more than rupees 10 crores and they are receiving the consideration of more than 50 lakhs from a buyer. Which buyer? The buyer whose last year turnover is not more than 10 crores. Then in that case, the seller who is receiving the consideration, they will collect the TCS in excess of 50 lakhs. On that excess portion, the TCS would be at 0.1%. The deadlock will arise when both the buyer as well as the seller in their last year respectively has got turnover of more than 10 crores and the payment which is made is 50 lakhs, more than 50 lakhs. So whether the buyer will deduct the TDS or the seller will collect the TCS. Now this is the kind of a challenge that will happen. Now all of you will agree to this one, students. All of you students, you will agree to this particular point that the seller over here, students, the seller who is there, the TDS, if I have to pay 100 and I have to deduct TDS, then I'll deduct 10. Say, I'm just giving an example. I will deduct 10 as TDS, pay 90, but my transaction cost is only 100. But if I have to collect the TCS, then if the transaction value is 100, then the TCS will be collected over and above 100. TCS makes the transaction cost on a higher side. It makes the transaction expensive. So given a choice between TDS and TCS, which will be preferred? TDS will be preferred because it maintains the transaction cost level at same 100. So therefore the transaction cost remains the same. So obviously even the government thought of giving the preference to 194Q and not of 206C1H whenever such deadlock will arise. When the deadlock will arise? When both the buyer and seller in their last year turnover is more than 10 crores and the consideration which is paid is more than 50 lakhs. Now there is another angle that will come into picture, and that angle is of 194O. Because if through e-commerce, if you are doing this transaction and then there is a buyer and seller, in the e-commerce you are doing the transaction and then there is a buyer and the seller, then even this e-commerce operator is deducting the TDS. So therefore, there is a circular which has been given to you. I am giving you the crux of the circular. Just remember only this much is sufficient. There is a circular which the CBDT has given herein. If you all will read this circular guidelines of this one, you can read it once if you want. Students, please do read it once. This 8 point, only one reading will be sufficient, but I am giving you the crux. The crux is that they have said that if 194O 194Q and 206C1H is all applicable, then you will deduct TDS only in 194O. You will deduct TDS only in 194O because through 194O we can track everything. The e-commerce operator who is deducting the TDS, through that we can track all the transactions. So therefore, because this is an intermediary, 194O, this guy is an intermediary. So we can track it. So if 194O is applicable along with the other two sections that we have just mentioned, 194Q or 206C1H, then we'll go with 194 only. The other compliance is not required. If there is a tussle between 194Q and 206C1H, then it has to be 194Q that will prevail. If provided 194O is not there. So I'm just giving the hierarchy. And the third one, if neither 194O nor 194Q can be made applicable, then in that case it will go under 206C1H. Then in that case it has to go to 206C1H. They have given you the hierarchy in which the thing will operate. And again I'm repeating, if one is applicable, the other will not apply. So like if 194O is applicable, then neither 194Q nor 206C1H will apply. If 194Q is applicable, then definitely 206C1H cannot apply. And obviously the third one, 206C1H, therefore would be applicable when neither 194O nor 194Q would be applicable. When neither 194O nor 194Q would be applicable. I hope that all of you are clear with this one. So this is one of the important observation, students, which is to be considered over here, which I have already put up to all of you in this regard. Apart from this one now, students. So that is it, students. That is it. Now, students, here in non-compliance, consequence of non-compliance, SSC default, I told you that. Interest rate, students, just keep that in mind. There are two rates of interest. One is 1% per annum and another is 1.5% per annum. 1% per annum or part thereof when the TDS is deductible and you have not deducted TDS. So till the time the TDS is deductible, and when the TDS becomes deductible, when it is deductible it is at the time of payment or credit, whichever is earlier. Payment or credit, whichever is earlier, it becomes deductible. And finally till the date it is deducted, till that particular point of time, the rate of interest would be at 1% per month or part thereof. 1.5% when it is actually deducted till you have done the deposit. Actually deducted till the date you have deposited, the rate of interest that will be charged would be 1.5% per annum. Now, can this interest be waived in this case? Yes, it can be waived. These are important theory questions. 2011A. Important theory question. Okay, so this is the point which has been there. Apart from the 234E, it's a fee, students. Be very careful. This is a very favorite section of total income. So if this fee, students, is for missing the due date. Remember the quarterly due dates of filing the statement? Are you aware of it or not? Or forgotten by now? Say. Aware of forgotten or by now? Sir, no, by now we have forgotten. What are the due dates, students? Due date to file the statement, students. Quarterly statement, what are the due date? That is what I need to know from all of you. All of you only are going to say this point, students. All of you are only going to tell me what is the due date, students, to file the quarterly statements. Quickly, students, you should be aware of these things. Vinay, Betty, Amruta, Bhagwati. Sarida. On next Sunday, part C will be up. It will be up. 50% is over. But this 2-3 days is very hectic, Sarida. So that is the reason why I will be putting the part C. Part C will cover up more students. So part C, as you all are aware, is a charitable trust. Is charitable trust students. TDS, TCS, assessment procedure. That is part C. So 50% you are done with it. 50% students have to still do this one. Okay, Sarita. So students, come back to this one. Quickly, students, due date. The due date of this one, of filing the statement. The due date to file the statement, students, as you should be aware, 31st July, 31st October, 31st January and 30th of June. So please write this particular part over here. It appears that you people have forgotten this one. So write here in this context, students, the quarterly filing of the statement. The quarterly filing of the statement, students. So first quarter, 30th of June. (30th of June), 30th September, 31st December, 31st March. So these are the quarter ending. TDS statement and TCS statement, students. The TDS is 31st July. This is 31st October. This is 31st Jan. And this is 31st May. Be careful. You may make a mistake in the last one considering this to be 30th of April, which is not the case. This is 15th of July. TCS is be careful because they can target TCS this time. 15th of October. 15th of Jan and 15th of May. 15th of May, friends, this is what it will be. I hope that all of you are clear with this one. Now, this is a kind of a mistake which the students can easily do this one over here. So the TCS is what I just wanted to confirm on this one. Now in this context, I've told you already the topic, Sarita. So where is the question now? All the topics I've told you, so you can just understand the importance of the topics. So in this context, students, this is the dates by when you need to file the things. So in this regard, students, if you all see very carefully, then what we get, 234E fee, which is there, 200 rupees per day. Okay, 200 rupees per day, which is there. Now here what I told you is this, that so failure to file, you have to therefore be calculating from this one. After the due date, students, you will start calculating this particular point. Now when you talk about 200 rupees per day, the 200 rupees per day you will be calculating, students, and then ensure that that payment that you do, is it allowed as deduction to you? The payment of 200 rupees per day that you have done it, will it be allowed to you as a deduction? And the answer is yes. I've already told you, students, the penalty which we are discussing, 44AB, failure to deduct the TDS. In that case, there would be a penalty. Even though there may not be a disallowance, but the penalty would be there in this regard, and that exactly is the point. So this much is sufficient, and that wraps up this particular part. Now the TCS, the remaining portion of TCS. We have done the motor vehicle. We have done for motor vehicle. The 206C1, the first one which has been there. The 206C1, students, which has been there, if you all see very carefully. The 206C1 which has been there, students, very carefully, specific goods such as alcoholic liquor, forest produced scrap, which they are mentioning it over here. Now students, although the rates are there, like the scrap is the most important one over here. I think all of you are aware of the scrap, 1%. Now the scrap, why it is important? Now by the way, in the TCS also the rate has to be top up with the HEC if the buyer is a non-resident. If the buyer is a non-resident, then the topping up will be required to be done over here also. The topping up will be required to be done over here also. Just a second, just a second. Just a second. So now students, if you all see, the scrap is 1% which is there. The scrap, students, is 1% which has been there over here. So one very popular case study that you people are aware of, the scrap part, which is that case study, in which case the buyer who is there, the buyer, students, are you aware of that buyer for the scrap purpose? So the buyer, if he is taking a scrap, but actually he is reproducing the goods. So therefore, like the shipbreaking industry, I think that one case law is very popular. The shipbreaking industry, students, that case law is very popular, isn't it? In that shipbreaking industry, students, which has been there, that they talk about it. So that shipbreaking industry, if that metal which has been taken out, this can be used to reproduce it further. So that is not a scrap. Priya Blue Lines case. Remember Priya Blue Lines case. So this is not like a scrap, and therefore no TCS will be collected in that case. No TCS will be collected in that case. Just keep that in mind. Now one question, students, which you just be very careful in application point of view, motor vehicle. From a motor vehicle point of view. See, they can ask you a total income question. Total income plus the tax liability, calculate a tax liability. And when they are calculating a tax liability, they can tell you in question number 1 that I have purchased a motor vehicle in the year. Motor vehicle, students, have purchased it, and the purchase price was 20 lakhs. So while I calculate the total income, I'll take the depreciation, 15% rate of depreciation I'll calculate. But when I calculate a tax liability, students, be careful. on this 20 lakhs I have claimed depreciation, but in this case, which is rupees 3 lakhs? Which is rupees 3 lakhs? So 3 lakhs would be the depreciation, students, that I would be claiming it. But more importantly, students, over here is this, that on the tax liability, students, when I have calculated, so whatever is the tax, then minus from this the TCS will be there. Don't forget the TCS. This is what the ICAI played the game with inter-CA students. Not even a single inter-CA students could pick this one up. They were asking total income plus tax liability. TCS credit you have to give it. Inter-CA, this is the kind of level that they are asking the questions now. Inter-CA, this was the level that students they are asking the question now. So the TCS, you all are aware, students, how much TCS now will be applicable over here? Can you tell me the TCS part? So the TCS, students, that is going to be applicable should be, I think all of you are aware now. Now 20 lakhs which has been there into 0.1 into the rate is 1%. So he would have from me, the buyer, they would have recovered 1% extra. So 1% would mean 20,000. 20,000. So 20,000, don't forget to take this minus. And this minus, students, this TCS minus would be after HEC. So it will be like this, students. The TDS TCS credit or advanced tax credit. So you calculate the tax till HEC. Calculate the tax till HEC. And then from this minus what? Minus your TDS and TCS. All these things. This is where you will minus it. I hope that all of you are clear with this one. So this is what you will do it in this context. So here goes this particular point of 20,000 which has been there in this context. So this is about the motor vehicle. So this is one of the kind of a question which ICAI has targeted for the poor inter-CA students. Now students, this is the case of remittances out of India. One is the case of a LRS in respect of tour program package. Now students, the tour program package, always link this one up with this one. OTPP, overseas tour. So here is a case of, students, here is a case of the dealer, forex dealer. And there is a case of like the Thomas Cook. And then there is a ultimate customer. Now students, the Thomas Cook will approach this one because the Thomas Cook arranges international tours and all, isn't it? For which they will require the foreign currency. So in that particular case, when the foreign currency, Thomas Cook will be required. So receipt for remittances under the LRS of India for a buyer in respect of tour program package. In respect of tour program package, students. So that is what they will be looking at for. Now what they have said is, in this case, students, be careful in this situation. So will the TCS, will it be collected? And the answer is yes. So credit or payment, whichever is earlier. So authorized dealer who is giving the foreign currency or who is going to make the payment. So the Thomas Cook will say that I want the payment to be done in these 3 locations of a foreign currency of, say, whatever be the dollar. So they will give the remittance of the foreign currency based on the request. But, and this was in respect of tour programmer, because Thomas Cook has to arrange the tours now, so therefore they have to make international payments. So because they have to make the international payment, they will approach to this forex authorized dealers, and the forex authorized dealer will be making the payment. On that payment, the forex dealer, students, in this case, will be collecting what? Collecting the TCS. Now students, here there is no threshold. For this, no threshold exists. So just be very careful. So no threshold. No threshold, directly at 5% is the rate on which the TCS will be collected. Who will be collecting the TCS? The TCS will be collected by the authorized dealer. And if it is a non-PAN case, 10%. So 5% or 10% depending on the non-PAN case. So they will be collecting the TCS. Fine. Now they are selling. So this is for the tour program package. Now they are selling OTPP, sale of overseas tour program package, to the ultimate buyer. Now again the same thing, 5%, no thresholds. No thresholds for them. 5% and no thresholds for them. Keep this particular point in mind. 5% and no thresholds for them. This is what you should always keep in mind, students. So TCS will be collected straight away. Fine. So this is how it will go in for. This is how students it will go in for. The next point, students, happens in the case of any other remittances. This is one important one. Now, students, in any other remittances, like I have got my, I have parents outside India and I want to give the remittance. And I have done the remittance of 3, I have to give a remittance of 3 lakhs. So here I will get a threshold of 7 lakhs rupees. So 7 lakh rupees threshold is only for this particular category. The 7 lakhs threshold, students, is only for this particular category, which would be that since in my example it was 3 lakhs, no TCS would be collected. In my example it was 3 lakhs, so therefore no TCS would be collected. I hope that all of you are clear with this one. Now here also, students, there are 2 categories. Which are 2 categories? So here, if you see the remittance out of the loan obtained from any financial institution. So supposingly I have 2 things. I want to make the payment of 50 lakhs. Now 25 lakhs I have money with me. 25 lakhs I want to take up the loan from the financial institution who are in 80 financial institution. So what happens, students? For this and this, 7 lakhs limit would be considered separately. 7 lakhs limit would be considered separately, and only on the excess portion, students. Now be very careful. This is where the excess comes. Only on the excess, that is, here it would be 18 lakhs, here it would be 18 lakhs. And on this 18 lakhs, one is for the loan. On this 18 lakhs, for the first one it will be at 5%. For the first one it will be at 5%. Students, that is what it would be. Okay, and for this one it would be at the rate of 0.5%. And non-PAN 10, non-PAN 5. This is a non-PAN. So if it is a normal case 5%, non-PAN I am writing 10%, normal case 0.5, non-PAN 5%. So it is actually 10 times. If you see, other cases is only double, but here it is 10 times. So it's a very dangerous part. So there are 2 learnings from here. First of all, the rate will differ, obviously, because the loan, they will not want to pinch them hard that you have to pay more, because already he is taking for a loan. Just think of this poor fellow. Already he is taking a loan and you say no, okay, since you are taking a loan, more 5% you have to pay for the TCS part. So it is already a burden in loan and you want to say more 5%, no. So therefore they have said only 0.5% would be collected over and above the loan amount. But the independent threshold of 7 lakhs will be applied independently to each. So students, even in this case the threshold is there. So can you write the threshold, students? 206C. Students, please write the threshold. The list of threshold that you are preparing. 206C. 206C 1G clause A. And this is for other than TPP, 2 program package. And what is the threshold? 7 lakhs. So how many cases of threshold that you have prepared now? I think 4. 194N, 206C1H, 194Q primarily, isn't it? And therefore now this is the next category. This is the next category, students. So in all these cases, the excess is what you have taken into account. The excess is what you have taken into account. Is that clear to all of you, students? So 7 lakhs is the amount which has been there over here. With that, students, we are done with this particular point. There are examples, students. You can just quickly run through the examples from here. Directly, you can refer the example. 2 examples are there. One is of trips, another is of Mr. Sumit and all. You can run through that, and we are done with this most important topic of TDS, TCS, including the procedure thereon. Now, one point, students, that you will look into it is this. I will still say the rate will not cause you the problem, but the thresholds will create a problem to all of you. You have made a 50 lakhs threshold limit, isn't it? What else that we can think of it in terms of the threshold? Let me see if I can make some combinations for all of you. Is there any combination work to be made? I think we will survive. Don't worry, students. You will survive. Just keep revising in this compartment. You will all survive. Don't worry. These are the only two. Only in this case, now you just be very careful on this part. The capital. Other than that, it remains in your mind. Other than that, it remains in your mind. Okay, but by the way, just keep in mind the winnings. Winnings are very dicey because here in winnings, 10,000 is what you should always keep in mind. More than 10,000 only, that the winnings will have the TDS angle. More than 10,000 only, that the winnings will have a TDS angle. Is that clear to all of you students? All of you are clear with this one? Fine. Now, only this part you have to be careful on the real estate. Why this part you have to be careful? Because here in the real estate transaction, for 194 IC, that is the Joint Development Agreement, there is no threshold at all. There is no threshold for 194 IC. For 194 LA, it is 2.5 lakhs. Okay, 194 LA, it is 2.5 lakhs. Okay, so that is the point. Whereas 15,000 commission, common to this, 15,000 for commission, 10,000, 10,000 for winnings, and 5,000 generally. But for dividend, there is nothing. Be careful. Dividend, there is nothing. So here, dividend, there is nothing. That is one thing which has been there. Interest on debenture, there is a 5,000 part which is there. So therefore, two things which is required is the interest on dividend, the interest on security on the debentures part, 5,000. Dividend, there is nothing. Just keep these 2 or 3 items. You just focus, students, whenever you revise a threshold, revision of threshold you will require only for these items. Revision of threshold, the interest, dividend, winnings from lottery, thereafter capital gains. There are 3 things. One is 50 lakhs for IA. For IC it is nil. For LA it is 2.5 lakhs. This is for CG. This is for CG. Fine. Rest of it, students, you can easily tackle it. Absolutely nothing. Rest of it, students, you can easily tackle it. Nothing is there in this regard. Okay. We have already created a 50 lakhs threshold and all those stuffs are there. So absolutely there is no worry. Only the 3 categories, students. Just be very careful on that. The rest of it, students, as I told you, there is absolutely nothing to worry. I hope that all of you are clear with this one now. So we are done with this now, students. Now this weekday, students, I'm going to start with assessment procedure. Meaning thereby like Tuesday, Wednesday and Thursday, I may take up assessment in the evening at 6 o'clock. In the evening at 6 o'clock. So we'll try to finish it off that assessment part in this weekday so that the entire segment is over. By this Thursday, I'm targeting to complete your entire assessment up till that. So we'll try to finish it off that so that your assessment, penalties, appeals and revision is over. So you will be done with your 75 marks revision, students. Congratulations. And thereafter the last leg of revision will remain, and you all are aware which is the last leg of revision. Your REIT, business trust, MAT, AMT, alternate taxation regime, partnership assessment. Those are the few things. So those topics and the CG. So that I will do it in somewhere in the first week of April or so. I'll target that particular period. Okay. So Tuesday, students, I will keep it Tuesday, Wednesday and Thursday. I think that is good to go for all of us to finish it off. Your remaining area of syllabus. Okay, of assessment, penalties and rectifications and appeals. Is that clear to all of you, students? Evening, maybe it could be 6 o'clock or evening it could be at 8 o'clock depending upon the situation that we are in at that point of time. I hope that this point is well taken by all of you. Fine, students. So with that, now we are done with this, students, and thereafter now let me meet you now on this one. Students, now what you can do, humble suggestion to all of you is this. What you people can do is that very quickly, students, you should revise the practicals. We have done with this one. You can spend another half an hour, 45 minutes. You'll be finishing it off your entire practicals of TDS, TCS at quick point of time. I've already have done a lot of things. You can just try to touch upon the practicals quickly, and once and for all, students, in the next 1 hour, you will be at peace. Just 1 hour more, students. Give it yourself a chance right now. You'll be at peace, students. All your hard work right now, you will ensure that you will be done with it. And now directly after this, no practicals will be referred henceforth. What at the most, students, you can do while you are referring to practicals right now, you can make your notes, like final notes. so that now that final notes only you need to revise on the day of the examination, or the last revision that you will think of it, if you are thinking of it, that is only needed to be revised, no practicals thereafter. So you can have your lunch, students, quickly, and please spend 1 hour extra more now, and you should finish it off. This my humble suggestion to all of you. Fine. So see you then, students. Do that so that this 1 hour extra will help you gain a lot of confidence, knowing that stake is of 6 to 8 marks, nothing like that. See you then, students, in the next class. Take care. Bye bye. Just hold on, students. One announcement I forgot. The announcement, students. Students, can you see this one? The Unacademy Iconic Subscription Plan. Do tell your friends who have got their attempt due in May 23, November 23 to join the Iconic plan, which is actually the best of the lot. Textbooks are given out, solving facilities are there, and the 3 test papers for every subject has been there. They can definitely take up the group wise students that is available for them. They can take up in the English also. They can start with the English batch. They can do it in Hindi. That is up to them. I am taking both in Hindi as well as in English, so therefore that option is also there. Plus all the other faculties are also there for the remaining papers. 12-month subscription, students, you have to take it minimum, and please do tell them to put this code CADS, because by putting this code CADS they get that 10% discount. Okay, so this is what is strongly recommended to them. And one very important announcement is about this intermediate part. Students, any of your intermediate juniors on your firm who want to take up the tuitions, so subscription in Unacademy, as you all are aware, is relatively cheaper, and with all the host of benefits which are there. So with this, they can tell them to do it in this March week itself, because from April next financial year it is going to be a rise of 25%. So why not to take up this benefit right now if they are having this attempt due in in the month of June, or in the month of November or May 23. Do it now. Again, the same thing, even if for intermediate students, do tell them to put the same code CADS so that they can take up this 10% discount. Okay, so that was a very important announcement which students I thought to just share with all of you, and I'll see you now in the next class. Thank you.